morning, students. Welcome you all once again in the live virtual classes organized by Board of Studies of ICAI. Friends, my name is Alok Garg, and today and in the next class, I'll take you through with Ind AS 1. And friends, one more agenda is there: Introduction of Division 2 to Schedule 3. Right. While this was scheduled to be covered in the overview and roadmap of implementation class, but purposely I have added this topic in this class because Ind AS 1 also talks about presentation of financial statements, and this Schedule 3, Division 2 to Schedule 3, it also provides the format of the financial statement. Okay. So both are complementing each other. So in the first half, in the next 1.5 hours, we will discuss division 2 to schedule 3, and in the later in the later half session, so we will cover Ind AS 1. We'll start with Ind AS 1, and in the next class we will complete Ind AS 1. Right? Sounds good? So friends, two agenda: introduction to division 2 schedule 3, division 2 to schedule 3, and Ind AS 1. We have two classes, right, today and day after. Okay. So first, let's start with an introduction to Division 2 to Schedule 3. Let me set the context. We have already covered and we are aware that the format of financial statement is governed by Schedule 3, right? So friends, in March 2014, the first Schedule 3 came in March 2014, and that Schedule 3 was only for the accounting standard compliant companies, okay? Because at that point of time, Ind AS were not there. Subsequently, on 16 February 2015, Ind AS were notified with the mandatory applicability date, mandatory applicability year from 2016-17, right? So earlier it was March 14 when Schedule 3 was notified. Then on 16 February 2015, Ind AS were notified effective from financial year 2016-17. So on 6 April 2016, my dear friends, so when Ind AS become applicable to the listed companies and they have to publish their results for the first quarter also, so they were asking for the format of the financial statement under Indian accounting standard, because Indian accounting standard were substantially different than accounting standard. So my dear friends, in that case, so MCA, Ministry of Corporate Affairs, comes with a notification on 6 April 2016, and MCA told that the Schedule 3 which we have given you, we are nomenclating that Schedule 3 as a Division 1 to Schedule 3, and the new guidance we are providing you, whose name is Division 2 to Schedule 3. And this Division 1 to Schedule 3 is same, whatever we have notified in March 2014, right? And this Division 1 to Schedule 3 will be applicable to AS compliant companies. It will continue to be applicable to AS compliant companies. But Division 2 to Schedule 3 will be applicable to Ind AS compliant companies, right? Then, my dear friends, on 30th March 2016, Ind AS on NBFC company was also notified. Means the roadmap of Ind AS applicable to NBFC was notified. So now NBFC said, see, we have a different kind of a business. We are differently structured entity. So please provide a format of financial statement for us also. And the first mandatory applicable year for NBFC companies was 2018-19. So with that, on 11 October 2018, another notification came on 11 October 2018, and another notification came which says that Division 1 to Schedule 3 was continue to be applicable to AS compliant companies. Division 2 to Schedule 3 is continue to be applicable to Ind AS compliant companies except NBFC companies. And now Division 3 to Schedule 3, which we are giving you as a new guidance, Division 3 to Schedule 3 will be applicable to Ind AS compliant companies. Which Ind AS compliant companies? NBFC Ind AS compliant companies. So Division 3 will be applicable to NBFC companies who are following Ind AS. So this is Division 1, Division 2, Division 3. So in our CA final curriculum, we have to discuss Division 2 to Schedule 3. Division 2 to Schedule 3, right? And this Division 1, Division 2, Division 3 is notified by MCA. It is notified by MCA. I hope it is good to everyone, I hope, right? It is good to everyone? Yes, great. Yeah. So this is notified on 6 April 2016. This is notified on 11 October 2018. Okay. And this was in March 14. This A is compliant. So friends, now let's talk about the financial statement format under Ind AS, right? So under Ind AS, there are two standards. Ind AS 1. Ind AS 1 talks about presentation of financial statement and Ind AS 7 talks about statement of cash flows. These are the two standards which prescribes the format, or I would say presentation of financial statement. So when I will cover Ind AS 1, so Ind AS 1 defines what is meant by financial statement. What are the component of the financial statement? So what are the component of the financial statement? Balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, notes to accounts. So this Ind AS 1 deals with the presentation of balance sheet, P&L, statement of changes in equity, notes to accounts. But for cash flow statement, Ind AS 1 says that please go to Ind AS 7. Please refer Ind AS 7 for statement of cash flows, right? So there are two standards which plays a very important role in the format of the financial statement, in the presentation of the financial statement. Ind AS 1 and Ind AS 7, right? Now, friends, as we discussed the component of the financial statement, what are the component of the financial statement? Balance sheet, right? Balance sheet. So friends, for balance sheet presentation, balance sheet format, the guiding rules, the framework, the regulatory principles around balance sheet is covered under Schedule 3 and Ind AS 1. So Ind AS 1 also gives some guidance about the balance sheet preparation and presentation, and Schedule 3 has given a format of balance sheet. Second is statement of profit and loss. Like balance sheet, Schedule 3 gives a format of the statement of profit and loss, and Ind AS 1 also provides some guidance around the statement of profit and loss. Third, statement of changes in equity. My dear friends, again, Schedule 3 provides a format of the statement of changes in equity, and Ind AS 1 provides a guidance around the statement of changes in equity. Fourth, statement of cash flows. Ind AS 7, statement of cash flows, right? Friends, if I talk about Ind AS statement of cash flows, Schedule 3 does not provide any guidance around the cash flow statement, right? Schedule 3 says that you have to follow respective accounting standard. I mean to say Ind AS, right? So there is only Ind AS 7 which provides the guidance on statement of cash flows. Then notes to accounts. So again, in notes to accounts, Schedule 3 and all Ind AS, for example, a related party disclosure. Ind AS 1 says that the disclosure requirement in other standard needs to be followed, right? So Ind AS 24 provides related party disclosures. Okay. So Ind AS 24 needs to be followed in the notes to accounts. Ind AS 37 provides a disclosure requirement of contingent liability. So Ind AS 37 needs to be followed. Ind AS 19 employee benefit standard provides the disclosure requirement of the employee benefits like gratuity, leave encashment. So all those detailed actuarial disclosure needs to be followed, right? So to cut a long story short, in balance sheet, P&L, statement of changes in equity, so Schedule 3 provides a format and Ind AS 1 provides a guidance, okay? Statement of cash flows, only Ind AS 7 is applicable. Notes to accounts, Schedule 3 and all Ind AS are applicable, right? Now, friends, let's understand Division 2 to Schedule 3. This Division 2 to Schedule 3 is applicable to Ind AS compliant companies. It is applicable to Ind AS compliant companies. Okay. Which companies? Ind AS compliant companies excluding NBFC. Why, sir, excluding NBFC? Because for NBFC compliant NBFC companies which are complying with Ind AS, they have to follow Division 3 to Schedule 3. Okay, right? So friends, when Ind AS were notified, do you remember when Ind AS were notified? Ind AS were notified on 16 February 2015. 16 February 2015. Okay. How many Ind AS were notified? 39 Ind AS. How many Ind AS are applicable as on today? 39 Ind AS are applicable as on today. Okay. Now, friends, let's understand the universe of universe of Schedule 3, Division 2 to Schedule 3, right? Now, the first question, Schedule 3, whether Schedule 3 is applicable to companies only or it is applicable to non-corporate as well. Whether Schedule 3 format is applicable to companies only or it is applicable to the partnership, proprietorship, Hindu undivided family, local authority, association of person. Answer is Schedule 3 is governed by Companies Act. Companies Act is applicable to the companies only. Companies Act is not applicable to the partnership firm. They are not applicable to the non-corporate entities, right? Companies Act is applicable to the companies only, right? So Schedule 3 is applicable to companies only, okay? How many divisions to Schedule 3 is there and what is the applicability? How many divisions to Schedule 3 is there? Tell me. Schedule 3, 3 division. As simple as that. So there are 3 divisions to the Schedule 3, right? 3 divisions to the Schedule 3. There are 3 divisions. And what is the applicability? Division 1 is applicable to the companies who are following accounting standard, old accounting standard, okay? Division 1 is applicable to the company who are following old accounting standard. Division 2 is applicable to the non-NBFC company, means normal companies, non-NBFC companies who are following Ind AS. Division 3 is applicable to NBFC companies who are following Ind AS, right? Who are following Ind AS. Division 3 is applicable to NBFC companies who are following Ind AS. Okay. So 1 is for AS, 2 is for non-NBFC companies Ind AS, 3 is for NBFC companies Ind AS. Okay. When did Division 2 to Schedule 3 was notified? When? When did Division 2 to Schedule 3 was notified? I just talked about couple of minutes back. Division 2, Division 3, 6 April 2016. 6 April 2016. 6 April 2016, Division 2 to Schedule 3 was notified. Whether Schedule 3 got amended post originally notified, if yes, when was the major amendment happened? Whether Schedule 3 got amended post originally notified. For example, this Division 1, I mean to say normal Schedule 3, first time was notified on 24th of March, right? 24th March 2014. Then Division 2 to Schedule 3 was notified on 6 April 2016. Then Division 3 was notified on 11 October 2018. So the question is whether Schedule 3 got amended post originally notified. When the major amendment was happened. Okay. Yes. If I talk about Division 2 to Schedule 3, Division 2 to Schedule 3 was notified. Division 2 to Schedule 3 was notified on 6 April 2016, but it got amended. It got amended on 11 amendment. It got amended on 11 October 2018 and 24th and 24th March 2021 and 24th March 2021, right? 24th March 2021. Yes. So friends, when this Division 2 to Schedule 3 was notified on 6 April 2016, it was amended on 11 October 2018 and it was further amended on 24th March 2021. And friends, the major amendment in the last amendment was happened on 24th March 2021, and not only on Division 2 to Schedule 3, it happened on all the divisions of Schedule 3, right? Division 1, 2, 3, in all the divisions of Schedule 3, right? So the major amendment happened on 24th March 2021 on all the Schedule 3, all the divisions of the Schedule 3. So Schedule 3 was majorly amended on 24th March 2021. Okay. Whether Schedule 3 is applicable to standalone financial statement or it is also applicable to the consolidated financial statement. Tell me. Schedule 3 is applicable to the both the financial statement, not only console, it is also applicable to the consolidated financial statement. Yes, Schedule 3 is applicable to both. standalone as well as console. Okay. Friends, whether requirement of Schedule 3 needs to be strictly followed, sorry, whether requirement of Schedule 3 needs to be strictly followed, or if there is any requirement of Ind AS and Companies Act 2013, can the Schedule 3 requirement needs to be modified? Tell me. So whether the requirement of Schedule 3 is strictly followed, or if there is any other regulatory requirement, or whether if there is any other regulatory requirement, so whether in line with those regulatory requirement, whether the compliance needs to be modified in accordance with the Schedule 3. Tell me. Tell me. Yes, it has to be modified in compliance with Ind AS and other regulatory requirement. It has to be modified. Okay. So requirement of Schedule 3 needs to be followed. But if there is any requirement of Ind AS and Companies Act, the Schedule 3 requirement needs to be modified also, right? It needs to be modified. Okay. If there is any conflict between Schedule 3 and Ind AS, which will prevail? If there is any conflict between Schedule 3 and Ind AS, which will prevail? Tell me, Ind AS will prevail or Schedule 3 will prevail? Ind AS will prevail. Indian Accounting Standard will prevail. Ind AS will prevail. Okay. Ind AS will prevail. For example, Schedule 3 says that when the company has done the revaluation of the fixed asset, which is known as property, plant and equipment. Revaluation of property, plant and equipment. If the company has done the revaluation of property, plant and equipment, what happened? What happened? So the company needs to disclose the revaluation related disclosure when the difference between the carrying amount and the revalued amount is more than 10%, is 10% or more, right? This is the requirement of Schedule 3. This is the requirement of Schedule 3, my dear friends. Okay. This is the requirement of Schedule 3. Okay. Schedule 3 requirement. Now, Ind AS says that whenever there is a revaluation, right, the revaluation related disclosure needs to be made. Ind AS 16, property, plant and equipment says that whenever there is a revaluation, the revaluation related requirement needs to be disclosed. So Schedule 3 gives a threshold of 10%. If there is a minimum revaluation impact of 10%, then only it needs to be followed. Then only the disclosure needs to be provided, otherwise not. But Ind AS has not given any threshold, means if there is a difference between the revalued amount and the carrying amount of, let's say, 2% also, the disclosure needs to be given. So the point is whether we should stick to the disclosure in case of more than 10% in compliance with Schedule 3, or the disclosure has to be provided, doesn't matter if even there is 1% of difference is there, 1% of impact is there. So Ind AS will prevail. Even there is a 1% difference between the carried amount and revalued amount, still disclosures required to be given. Okay. Whether any act or regulation requires specific disclosure to be made in the financial statement of the company, whether it is required to be made in addition to those required under Ind AS Schedule 3. Whether any act or regulation requires specific disclosure to be made in the financial statement of the company, whether it is required to be made in addition to those required under Ind AS Schedule 3. Tell me. Whether any act or regulation prescribes any additional disclosure, specific disclosure to be made in the financial statement of the company. Yes, SEBI LODR. Securities and Exchange Board of India LODR Regulation 2015. They prescribe, okay, and Ministry of Corporate Affairs, Companies Act also prescribe. Companies Act also prescribe. For example, under Section 186, if the company has given any loan guarantee, okay, if the company has given any loan, any guarantee to the group companies, right? So the company needs to be disclosed the nature of the guarantee, amount of the guarantee, etc., etc. So details needs to be provided. So this is a Section 186 requirement. It has to be separately followed. Okay. So friends, yes, if any act or regulation requires any specific disclosure, like in case of NBFC company, in case of banks, Reserve Bank of India requires specific disclosure. So in addition to the accounting standard Schedule 3, so those requirement also needs to be followed. The answer is yes. Yes. Which component of financial statement format is prescribed by Schedule 3? Which component? I already covered this. Balance sheet component, financial statement format is prescribed. P&L prescribed. Statement of changes in prescribed. Cash flow statement, statement of cash flow, no. Statement of cash flow format is not prescribed. Notes to accounts, yes. For balance sheet, P&L, right? So many notes are there. The breakup of balance sheet item, the breakup of P&L item, secured, unsecured, right? So then your other notes like aging. Have you seen the notes to accounts of any company? So debtor aging, creditor aging, CWIP aging, intangible asset and development aging, okay, MSME disclosure, related party, so many disclosures are there, okay? So except statement of cash flows, all the component, format is prescribed under Schedule 3, okay? Whether item in the balance sheet needs to be bifurcated into current and non-current, yes or no? Whether items in the balance sheet needs to be bifurcated into current and non-current, is there any guidance given in Schedule 3 regarding that? Yes, it has to be classified into current and non-current, and guidance is given in Schedule 3 as well as in Ind AS 1. In Ind AS 1, we will cover the criteria of current and non-current, right? So whatever guidance is given in Ind AS 1, the same guidance is given in Schedule 3. So to cut a long story short, yes, the balance sheet item has to be bifurcated into current and non-current. Okay. Number two, the guidance is provided under Schedule 3 and the guidance is also provided under Ind AS 1. Okay. Right. What is the balance sheet P&L and SOC format in Schedule 3? What is the balance sheet format? What is the P&L format? And what is the SOC format in Schedule 3? So let me show you the balance sheet format, P&L format and SOC format, right? Should I show you that format? Okay. So let me show you the format with the, shall I show you the format with the real life listed company? Yes. Shall I show you the format from the real life listed companies? So let me show you the format from the real life listed companies. Okay. Just a minute. Let me open an annual report. Let me open an annual report of Indigo Airlines. Okay. Yes, because these companies are following Schedule 3 only, Division 2 to Schedule 3 only. I hope this Indigo annual report is visible. Yes, visible. Okay. If you see the balance sheet asset, current year, comparative year, right? If you see the balance sheet, asset, it start with the asset side. In our accounting standard in Division 1 to Schedule 3, balance sheet start with equity, then liability, then it comes to asset. But the global presentation of balance sheet is start with the asset side, then equity, then liability, right? So same way, under Division 2 to Schedule 3 and Division 3 to Schedule 3, we have the asset first, then equity, then liability, okay? So it start with the asset, okay? Then friends, under the asset, there is a non-current asset and there is a current asset. You can see all the item of the balance sheet, the broad category of the balance sheet is bifurcated into non-current asset and current asset. Okay. Non-current asset and current asset. And you can see the first line item is property, plant and equipment, right of use asset, capital work in progress, intangible asset under development, then financial assets. Okay. Then investment, loan, other financial asset, deferred tax asset, income tax asset, other non-current asset, inventories, financial assets, okay, investment, trade receivable, cash and cash equivalent, bank balances other than cash and cash equivalent, loans, other financial asset, other current assets, okay, right? So friends, asset has to be bifurcated into non-current asset and current asset, non-current and current asset, okay? So non-current and current, okay? So we will discuss about non-current and current later on, but if you see this line item, So if you look at the listed company balance sheet, doesn't matter what is the name of the company, doesn't matter it is Tata Steel, Tata Motors, ITC Limited, Bharti Airtel, Reliance Industries, Adani Enterprises, Indigo Airlines. Every company has the first line item of property, plant and equipment. Why? Why these different companies having a different auditor, having a different management, having a different person who are preparing the financial statement, why everybody has the first line item as a property, plant and equipment? Because this format is prescribed under Schedule 3. In the Schedule 3, the first line item is property, plant and equipment. Okay. So that is why they are following the same format. Okay. So the balance sheet item, the asset has to be bifurcated into non-current and current, and these sequence have been given in the Schedule 3. Okay, then after total asset, there is a equity and liability. In equity and liability, the first is equity. Under equity, there is a equity share capital and other equity. Other equity including reserves and surplus, which is reserves and surplus. Then, my dear friends, liabilities. Liabilities have been bifurcated into non-current liability and current liability, right? This is the total liability. Okay, these are the total liability. And friends, one more classification is there. In addition to non-current and current, in Ind AS Schedule 3, there is a granular classification of financial and non-financial also. There is a granular classification of financial and non-financial. You can see in the liability side, you can see the financial liability, right? So there are two financial liability. These remaining are considered as a non-financial liability. As per Schedule 3 format, the word non-financial has not been used, but the section of financial asset and financial liability has been given. So it is understood that whatever item is not covering under financial, it will be considered as a non-financial. Sir, what is the difference between a financial liability and a non-financial liability? Okay, or financial asset and a non-financial asset? Friends, when there is an obligation to pay cash, that is considered as a financial liability. When there is a when there is no any obligation to pay cash, it is not a financial liability. So what is a financial liability? When there is a obligation to pay cash, it is a financial liability. And what is a non-financial? Any liability it is not financial is non-financial, as simple as that. For example, my dear friends, let's say lease liability, okay, borrowings, trade payable. What are these items? If you have purchased goods on credit, it is trade payable. So what's your obligation? You have to pay in cash or you don't have to pay in cash? Of course, you have to pay. In cash means bank. Okay. Cash literally doesn't mean cash. Cash means bank. Whether you are required to pay through banking channel or not. Yes, you are required to pay through the banking channels. You are required to pay through the banking channels. Okay. Right. Nowadays, you are not required to settle in cash. Of course, up to a limited amount you can settle, but otherwise beyond that you can't settle in cash. It will be disallowed in Income Tax Act. So friends, sir, what could be the example of non-financial provisions? Right? Whether provision for gratuity. So the company keeps on accruing gratuity provision. But whether that gratuity provision is contractual, whether the company is contractually obligated to deliver in cash. I mean to say, for me, for example, I am working in a company and company is creating a provision for gratuity relating to my service. And if I will not complete 5 years or whatever it is, 4 year, 8 months, if I'll not complete that period, of course, my gratuity will be forfeited. The company is not contractually obligated to pay me a gratuity. Okay. So these kind of employee provisions, like provision for gratuity, provision for leave encashment, these kind of provisions are considered as a non-financial. Another example. Have you booked a flight ticket? Yes. You guys have booked a flight ticket. When you book a flight ticket, it is normally in advance. Okay. For example, a flight for the next month, I am booking a ticket right away. Okay. For next month flight, I am booking a ticket right away. So what happened, my dear friends? For next month, I am booking my flight ticket right away. So I am paying advance to Indigo. Okay. Since customer is paying advance to Indigo, it is, what is it? It is a liability to Indigo. It is a liability to Indigo. Okay. So when it is a liability to Indigo, okay. So whether it is a financial liability or non-financial liability to Indigo. I mean to say, whatever money Indigo has collected from the customer, whether Indigo is contractually obliged to pay cash or Indigo is contractually obliged to deliver goods and services. What is that liability? Indigo is contractually obliged to provide goods and services. Indigo is contractually obliged to provide passenger transport service, flight services. Okay. So here Indigo is not obligated to return money. I mean to say they will return money in case the flight get cancelled. But normally in the normal parlance, Indigo is not obligated to pay cash, contractually obligated to pay cash. They are contractually obligated to deliver service. Okay. So this revenue received in advance, money received in advance from customer will be shown as a other non-current liability. It is shown as a non-financial liability. Okay. Sir, what is a financial asset and what is non-financial asset? Non-financial asset is very simple. Any asset which is not a financial asset is a non-financial asset. But what is a financial asset, sir? When there is a contractual right to receive cash. For example, trade receivable. You have sold goods on credit. Whether you have a contractual right to receive cash or not. Yes, you have a contractual right to receive cash. Yes, you have a contractual right to receive cash. Okay, but the company has given advance to the suppliers. Okay, since the company has given advance to supplier, it is an asset. But whether it is a financial asset or a non-financial asset, the advance which is given by the company, the contractual right for paying the advance, the contractual right which is emerging, whether it is contractual right to have a goods and services or contractual right to have a cash, contractual right to have a goods and services, and hence this will be considered as a non-financial asset. So my dear friend, this is the balance sheet format. I hope you have enjoyed with the real life example of this large listed company, India's largest aviation company. Okay, then it is signed by, at the bottom it is signed by the statutory auditors and the board of directors. This requirement is as per Companies Act. It is not written in Schedule 3. Then coming to the standalone statement of profit and loss. Friends, whether it is a profit and loss or whether it is a profit or loss. Friends, it is a profit and loss. It is not or loss, profit and loss. Okay. Whether it is as it or for the year ended, it is for the year ended. It is not as it. This is for the year ended. Okay. So it starts with word income. And you can see there is a revenue from operations and other income. Then there is a total income. Then there is a total income. So income is a bigger word. Revenue is lower than income. What is a revenue? Revenue is an income which is arising in the ordinary course of the activity of the entity. So you can see this company has a revenue from operation for the year ended 31st March 25 is 80,800 crores. 80,800 crores is the revenue. Other income is 3,300 crores. Okay. The total income is 84,110 crores. Okay. This is the total income. Okay. Now, what are the expenses? You can see while expenses are entity based, but of course you have to provide the expenses. Like if you see the Ind AS 1 and Schedule 3, you will find employee benefit expenses, finance cost, depreciation, other expenses. Okay. So changes in inventories of stock and trade, purchases of stock and trade. Okay. So these are the aviation specific expenses. Airport fuel expenses, right? When you see telecom, they are also giving this energy cost. What is energy cost? The electricity expenses on their towers. Aircraft and engine rental, supplementary rental, airport fee and charges. So this is the expense head. Okay. So in the income side, revenue from operation and other income, this is given in the format. In the expenses side, so few wordings are given, few nomenclatures are given, few expenses are given. For example, purchases of stock in trade, changes in inventories of stock in trade, employee benefit expense, finance cost, impairment, depreciation, other expenses. Okay. But every company has their expenses as per the statute, as per their business model also. Then total income, then total expenses, total income minus total expenses will be profit before tax. Okay. Then there is a tax expense. Okay. Then there is a profit after tax. Then there is a net profit. Okay. Then there is a other comprehensive income. Okay. Then there is a total comprehensive income for the year. Total comprehensive income for the year. Okay. And friends, then there will be a basic earning per share and diluted earning per share. This basic earning per share, diluted earning per share is also part of Schedule 3 format. Okay. So, sir, what is other comprehensive income? We will cover in Ind AS 1. Okay. So, this profit will go to the retained earning, and this other comprehensive income will be shown as a separate reserve. Okay. So, profit after tax, which is nothing profit for the year, plus other comprehensive income is known as total comprehensive income. So, this plus this, which is minus technically, comes as a total comprehensive income. Okay. Then there is a standalone statement of changes in equity. My dear friends, the format is given in Schedule 3, and this listed company has also followed Schedule 3 format for the purpose of preparation of standalone statement of changes in equity. It is again, since it is a changes in equity, it is again for the year ended. It is not as on date. So in the first part, in the format of Schedule 3, equity share capital schedule is given, equity share capital, right? So opening balance, changes in equity share capital, okay, then closing balance, number of shares as well as amount for the current year and for the comparative year, okay, number of shares as well as the amount. This is the entire walk. Opening balance plus movement is equal to closing balance. Okay. Other equity, when I say other equity, so my other equity is what? Opening balance. Okay, opening balance. Then your changes, for example, let me talk about retained earnings. So my opening balance of retained earning was negative 2500 crores. I have earned profit 7200 crores. I have transferred some amount from RE to retained earning. Okay. Sorry, from OCI to retained earning. Okay. So this is my profit during the year. This is my total comprehensive income during the year, and this is my closing retained earning. So friends, it's a walk. It's a walk of, reserves and surplus. And you can see the other comprehensive income has been given separately. Okay. So this other equity is nothing. Other equity is reserves and surplus plus other comprehensive income. Okay. So which start from opening balance and end with the closing balance. Okay. So likewise, they have given the comparative also. Then there is a statement of cash flow which is not given by Schedule 3, which is as per Ind AS 1. So friends, I hope you guys have understood this format of balance sheet, format of P&L, and format of cash flow statement. I hope it is clear to all of you. So balance sheet, P&L, and SOC format in Schedule 3, I have shown you. This company has candidly followed Schedule 3 format. Whether any rounding of guidance is given in Schedule 3, if yes, what is the provision? Whether any rounding of guidance is given in Schedule 3, what is meant by rounding of guidance? If you see the balance sheet of Indigo Airlines, they have, in the financial statement, they have rounded of the figures in millions. Rounded of the figures in millions. Why? Oh, sir, can't we write? Can't we write the number in the absolute number? Why we need to write the number in the rounded off? Why we need to do the rounding off? Can't we write the number in the what should I say, in the absolute numbers form? So just think about the the big companies. The companies are so big, right? Their volume, their numbers are so big. If you start writing these numbers in the absolute form, right, till the last breath of the decimal, the numbers become too wide, right? And let me write this number. Indigo has a turnover of 8,08,030 million. And how will you read this 8,08,030 million? 808,030,000,000 This is the number of revenue from operation for the current year. Then you have to give the comparative also. 689,043,000,000. This is the comparative number. So friends, your balance sheet, P&L, cash flow numbers look like so bulky, right? And it is not readable. It is not readable also. But if I will tell you that this number is 8,08,030 crores, so you will be able to understand it quickly. If I'll tell you it is 8,08,030 million, you will be able to understand it completely and quickly. Okay, it is talking about 80,803 crores. So this is 80,000 crores. Okay, 8 lakh million is 80,000 crores. So you will be able to understand the number quickly and there is a less chances of the error as well, right? So what is the rounding of guidance, sir? Sir, what is the rounding of guidance? Let me talk about the rounding of guidance, okay? Just a minute. I don't know what's the problem. Yes. What is the rounding of guidance? Friends, rounding off is mandatory. Rounding off is mandatory in Ind AS, okay? Even if this is mandatory in accounting standard also. Accounting standard Ind AS means I'm talking about the format of the financial statement as per Schedule 3. Okay. So friends, you know, as I told you, there was a major amendment happened on 24th March 2021. Major amendment happened on 24th March 2021. Okay. And this major amendment on 24th March 2021. So this has done a lot of changes. Friends, earlier in Division 1 to Schedule 3, this rounding off was never mandatory, but now rounding off was mandatory in Division 1 of Schedule 3 also. In Division 2 to Schedule 3, rounding off was always mandatory. In Division 3 to Schedule 3, the rounding off is again always mandatory. Sir, why rounding off was mandatory in Division 2 and in Division 3? Normally, this Ind AS, these are the Ind AS companies, and normally Ind AS companies are the big companies, normally, right? So, now, what is the criteria of rounding off? Friends, earlier the criteria of rounding off was on the basis of revenue, turnover. But now the criteria is on the basis of total income, right? So prior to 24th March 2021, the rounding off criteria was on the basis of revenue from operations. But now the rounding off criteria is on the basis of total income. What is meant by total income? What is meant by total income? I have shown you the total income in Indigo's P&L. Total income is equal to revenue plus other income, right? The total side of the total of the income side, okay? Revenue plus other income. Now, what is the rounding of guidance? For example, if the total income of the company is less than 100 crore rupees, if the total income of the company is less than 100 crore rupees, then if it is less than 100, then it can be rounded off. The numbers in the financial statement can be rounded off to the nearest 100, to the nearest 100, nearest thousands, lakhs, or millions, or decimals thereof. So if the total income is less than 100 crores, then you can do the rounding off in the nearest 100. You can do the rounding off in nearest 1000. You can do the rounding off in nearest lakhs or millions or in the decimal as well, right? But if it is more than 100 crore rupees, then if the total income is more than 100 crore rupees, then 100 and 1000 is not allowed. 100 and 1000 is not allowed. Either you can round off in lakhs, millions, or crores. Lakhs, millions, or crores. Okay. So to the nearest 100, 1000, lakhs, or millions when it is less than 100 crores. So in less than 100 crores, crores is not allowed. Okay. But if the total income is 100 crore or more, then you can round off in the nearest lakhs, millions, or crores only. 100 and 1000 rounding off is not allowed. Okay. Is that clear, my dear friends? I hope it is clear to all of you. Let me show you the rounding off in the Excel file also, so that few students who are not able to understand what I'm talking about rounding off, they will be able to understand it very easily. Yes. Friends, I hope my Excel file is visible to everyone. I hope my Excel file is visible to everyone. Okay. So company has a turnover. Company has a total income of total income less than 100 crores. Okay. Company has a total income of less than 100 crores. I hope it is visible to everyone. So let's say I'm drawing a statement of P&L, right? P&L. In my P&L, what is this in my P&L? It is my revenue from operations, revenue from ops, right? Other income. Okay, then there is a total income. Revenue from operations are revenue from operations are 25 crore 26 lakh 25 crore 26 lakh 50,350. So 25 crore 26 lakh 50,350. Other income is 2 crore 30 lakh 2 crore 30 lakh 70,500. 2 crore 30 lakh 70,500. Total income is this much. Then expenses. Okay, so I'm only writing one expense. 13 crore 55 lakh 67,800. Okay. Then there is a PBT, profit before tax, which is this minus this. Okay. Then there is a tax expense, which is 30% of this. Right. Then there is a PAT, this minus this. So friends, company has a total income of less than 100 crores. You can see that. Now we have to do the round 100,000 lakhs and millions also. Millions is what is 1,000,000. Okay. So friends, you can see these numbers. While I have kept the numbers small, so even though you will find it difficult to read these numbers, but had it been rounded off in hundreds, thousands, lakhs or millions, so how the number will look like? This divided by 100. Okay. This divided by 100 and the two decimal thereof as well. Okay. This divided by 100. Okay. This divided by 100. Okay. So friends, what you can do, you can avoid the decimal also. You can avoid the decimal as well. You can avoid the decimal as well. Okay. Nearest 100. But sir, still the number is too big. Okay. So not a problem. You can divide by 1,000. This divide by 1,000. Okay. Divide by 1,000. Sir, still the number are too big. Okay. Then you can divide by lakh. Rounded off in the lakhs. Okay. Now talking on millions. This divide by millions. 1,000,000,000. Okay. So you can see if you divide in lakhs and millions, the numbers are too small, right? 276 million total income. Revenue 253 million. So in lakhs, the revenue is 2,527 lakhs. Okay. So this is the benefit of the rounding off, right? The numbers becomes very easily understandable. Okay. If the company has a total income of more than 100 crores, then what happened? If it is more than 100 crores, then these kind of question may be asked in the exam more than 100 crores. For example, revenue from ops. What I'm putting one here. 127 crores. Okay. So more than 100 crores. And expenses is, let's say, I'm putting one more one again here. Okay. So profit is, sorry, here I have put this tax expense in the 30% of this. I have to put 30% of PBT, just for the sake of it. Okay. So this is this. Friends, which rounding off is allowed? Which rounding off is allowed here? Hundred and thousands is not allowed. Lakhs, millions, and crores are allowed. Lakhs, millions, and crores are allowed. Okay. Lakhs, millions, crores. And okay. Yes. This revenue from operations, I'm not able to understand this number. I'm not able to read this number. 1252650350125 crore 26 lakh 50,350. It took so much of time, so much of concentration. But what should I do? I should, when I round off in lakhs, it life become very easy. It life become very easy to me. Okay. When I round off in millions, this divide by 1,000,000,000. Okay. Just a minute. Okay. Yes. You can see if you have rounded off in millions, in numbers become very easy. 1252 million. And if you round off in crores, then the life becomes very easy. 125 crores, right? 2 crores. 127 crore is the total income. 113 crore is the expenses. Okay. Then your PBT is 14 crore. Okay. Then your tax is 4 crore. Your PAT is 9.8 crore. See, this becomes very easy. Okay. So this is the rounding of guidance. This is the rounding of guidance. Rounding of guidance. A rounding of guidance as per schedule 3. Okay. Right, friends? Let's move on. So we understand this rounding of guidance. Okay. Let's move to understand the universe of division 2 to schedule 3. From where the question number 13, from where the meaning of the terms given in schedule 3 needs to be referred, like related party, control, associate, property, plant and equipment, etc., etc. Friends, when you read the schedule 3 document, you will find lot of, you will find lot of words: related party, control, associate, significant influence, property, plant and equipment, intangible asset. But these items are not defined in schedule 3. So from where you can get the meaning of these items? While these items are defined in accounting standard, Ind AS, okay? These items will be defined in Ind AS and accounting standard. So schedule 3 says that you have to refer Ind AS to understand the terms used in schedule 3. You have to refer Ind AS to understand the terms used in schedule 3. Okay. To understand the terms used in schedule 3. Okay. Now, my next question: whether any threshold for metallicity is defined in schedule 3. In India, there is no metallicity defined. But is there any threshold for any metallicity in India in schedule 3? क्या schedule 3 में कोई metallicity की threshold है that you have to show the income or expenditure beyond such an amount? You have to disclose it separately. Is there any such kind of metallicity threshold is there in schedule 3? Yes. Threshold for metallicity is defined in schedule 3. Sir, what is the threshold? Oh my God, the next question talks about the threshold. Any item of income or expenditure which exceeds 1% of the revenue from operation or 10 lakh, whichever is higher, needs to be disclosed. Is this requirement pertains to Ind AS or schedule 3? This is a schedule 3 requirement. This requirement pertains to schedule 3. This is a schedule 3 requirement. Okay. This requirement pertains to schedule 3. Any item of income or expenditure which exceeds 1% of the revenue from operations or 10 lakh, whichever is higher, needs to be disclosed in accordance with the schedule 3. What does it mean? For example, the company has the company has a the company has a revenue of, for example, a revenue of 1 crore. Okay. What is the 1% of 1 crore? What is the 1% of 1 crore? 1 lakh. 1% is 1 lakh. Okay. And so what is the limit? Any item of income or expenditure which exceeds 1% of the revenue or 10 lakh, whichever is higher, which is higher between 1 lakh and 10 lakh, 10 lakh is higher. So any item of income and expenditure which exceeds 1% of revenue or 10 lakh, whichever is higher, which is 10 lakh. So if any item of income or expenditure is beyond this amount, it has to be disclosed separately. For example, printing and stationery. There is a printing and stationery expenses of 11 lakh rupee, right? 11 lakh rupee. Whether it is required to be disclosed separately, answer is yes, it is required to be disclosed separately because it is exceeding the higher of 1% of revenue or 10 lakh. Okay. So it needs to be disclosed separately. You cannot merge it into the other expenses. You have to disclose it separately. Is there any aging related disclosure given in Schedule 3? Is there any aging related disclosure given in Schedule 3? Yes. Aging related disclosure given in Schedule 3 for trade receivables, trade payables, CWIP, etc. Okay. So for these three items, aging related disclosures are given. What were the major amendment in Schedule 3 in accordance with the last amendment? Friends, as I told you, the last amendment happened on 24th March 2021. 24th March 2021. Okay. The last amendment. After 24 March 2021, since last 5 years, there are no amendments as of now. Okay. So these amendment happened in the last, these amendment happened in 5 years, happened on 5 years back. Okay. So friends, talking about this, what were the major amendment? Quickly, I'll capture some major amendment. Okay. And what are the major amendment? Let me cover that. Rounding off we have covered. Okay. So equity share capital, important, right? Friends, earlier we used to disclose the equity share capital, which is increasing if the shareholders are having more than 5% shares. Okay. If the holding of the shareholders are more than 5%, only that needs to be disclosed. But now, in addition to the 5% shareholding, 5% or more shareholding, so in addition to that, the changes in the promoter shareholding is also required to be disclosed, even if it is 0.01%, right? So this is a new requirement which came on 24th March 2021. The shares held by the promoter needs to be disclosed. And what are the disclosure? The name of the promoter, number of shares, percentage of total shares, and the percentage change during the year. For example, this is Hindustan Unilever disclosure. Okay. So Hindustan Unilever Limited, HUL Limited, these are the promoters of HUL Limited. They are holding this much number of shares on 31st March 22, and these were the percentage of the total shares. These are the comparative number, and these are the percentage changes during the year. So this is required to be disclosed, right? So you can see that 61.9% shares are held by the promoter of the company. 61.9% shares, right, are held by the promoter of the company. So this promoters holding disclosure was the new requirement which came in the last, last Schedule 3 amendment. Okay. So current maturity of long-term borrowings and long-term debt. This is important. Current maturity of long-term borrowing and long-term debt. Friends, earlier, this, for example, you have taken a loan for 5 years. So every year you have to pay EMI. So whatever EMI you have to pay within 1 year, it has to be shown as a current maturity of the long-term debt, and it has to be shown under the other financial liability. You know what was the problem? For example, the company has taken a borrowing. So the company will show the borrowings, right? Separately, the company will show the borrowings as a separate item in the balance sheet. Borrowing, the company will show as a 40 lakh. Okay. The company has taken a loan of 50 lakh, but the company will show long-term borrowing. The company will show long-term borrowing 40 lakh, and in the other current liability or other financial liability, company will show current maturity of long-term debt 10 lakh. So the reader of the financial statement was not able to tally what is my total borrowing, because this current maturity of long-term debt was sitting under the other current liability or other financial liability in the notes to accounts. So on the face, user were not able to make out that what is the total borrowing. So now standard said, so instead of showing it in a other current liability or other financial liability, you have to show the current maturity of the long-term debt as a short-term borrowings, right? So that when the user will look at on the face of the financial statement, long-term borrowing plus short-term borrowing is equal to total borrowing. So this is a change which was came. Okay. Aging for trade payables. If I talk about aging for trade payables, so friends, first of all, the trade payable has been bifurcated into two parts, MSME, other than MSME, right? First of all, two category. Trade payable. They have been bifurcated into MSME, others. Others means other than MSME. Then it has been bifurcated into two parts. It has been bifurcated into two parts, disputed and undisputed. Okay. So disputed and undisputed. So basically, disputed dues from MSME and undisputed, disputed, undisputed, disputed, undisputed. Okay, right? So first of all, by looking at this table, one should be able to understand that these are the MSME dues, these are the non-MSME dues, and these are the disputed dues. So these are the undisputed, these are disputed. So disputed and undisputed dues from MSME and other than MSME. The word undisputed has not been used, but it is understood. If you are presenting disputed, other one is undisputed only. Okay. Then there is a aging requirement. And what is the aging requirement? So from the due date of payment, for example, you have availed the service on 1st January 2026. The vendor has raised an invoice on 1st January 2026. As per the PO terms, the payment has to be made in 60 days. As per the PO terms. Okay. So what is the due date of payment? If I have received the invoice on 1st January and the payment term will start from the invoice date. Invoice date is 1st January. So it will be 1st March. Technically speaking, 1st March. If March has a 28th days, it could be 4th March also, 3rd or 4th March. So due date of payment is 3rd or 4th March. Okay. So if any amount of MSME creditor and other than MSME creditor, if it is due within 1 year from the due date of payment, 1 to 2 year, 2 to 3 year, and more than 3 year, this is required to be disclosed. So friends, what is required to be disclosed? Your trade payable is required to be disclosed, which is within 1 year from the due date of payment, 1 to 2 year, 2 to 3 year, and more than 3 years. While this not due is not part of this table, but it is also required to be given. Why? For example, the payment term is 60 days and the company has taken a service on 15th of March. Okay. So within 60 days will be finished on 15th of May. So on 31st March, it has not yet due, but it is part of trade payable schedule. So this not due is also required to be given, and accrued expenses is also required to be given. Accrued expenses means you have accrued, you have not received the invoice, so it has not been due. And you cannot say that it has not due because invoice has not been received. So not due trade payable and accrued expenses has to be given so that the final number will tally with your trade payable number in the balance sheet. Okay. It is applicable for the current year as well as comparative year. So my dear friends, the undisputed and disputed dues from MSME and other than MSME is required to be disclosed, and the aging is for less than 1 year from the date of payment, due date of payment, less than 1 year or more than less than 1 year, 1 to 2 year, 2 to 3 year, and more than 3 year. This is required to be disclosed. Okay. Same for trade receivable also. The trade receivables for division 2 to schedule 3 is required to be disclosed for disputed trade receivable as well as undisputed trade receivable. Disputed as well as undisputed. Okay. And what is the aging for it? The aging is, while in trade payable it was less than 1 year, here it is less than 6 months. Okay. So outstanding from the due date of payment. So it is less than 6 months from the due date of payment. Okay. 6 months to 1 year, 1 to 2 year, 2 to 3 year, and more than 3 year. Okay. So less than 6 months, 6 months to 1 year, 1 to 2 year, and 2 to 3 year, and more than 3 years. Okay. So less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, and more than 3 year. This is what it is there. Okay, right? So you can see the disclosure of Tata Steel Limited, what they have given, they have also given not due. As I told you, na, why not due is required to be given? So that the number will tally with your balance sheet. Okay. Then outstanding for following periods from due date of payment. From due date of payment, it is outstanding for less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Okay. Right. So less than 1 year of trade payable has become less than 6 months and 6 months to 1 year in trade receivable. Okay. If there is any allowances for credit losses, it is also required to be given. Okay. And this disputed and undisputed is required to be given, considered good, considered doubtful, credit impaired. Okay. So this is required to be disclosed. Right, friends? Clear? Another disclosure with respect to, so what are these disclosure? So for all the balance sheet line items and all the P&L line items, the disclosures are given in Schedule 3. For example, employee benefit expenses. So Schedule 3 is provided that for employee benefit expenses, it is one line item in the P&L, but in the notes to accounts, you have to provide salaries and wages. Okay. You have to provide contribution to provident and other funds. Okay. You have to provide staff welfare expenses. Okay. So these kind of expenses breakup is given in Schedule 3. So it was always given. But why I am covering these items? These items are the critical item. These are the additional information which had come in 2021, right? These are the new disclosure which had come. Okay. So that is why these major amendments I am covering here, which came on 24th March 2021. Okay. Friends, disclosure with respect to immovable properties whose title deeds are not held in the name of the company. Right. And this disclosure is required in Caro also. So at times, the company is using some immovable property, land, building, but it is not held in the name of the company. So in that case, you have to give some disclosures. What are the disclosure requirement? Let me show you with the real life disclosure. So first of all, the disclosure of immovable property whose title deeds are not in the name of the company. First of all, you have to give the description of the property. Right. For example, this disclosure is from the real life example of Tata Steel Limited. They have freehold land, building, right? These are the items which they have in their balance sheet, but it is not held in the name of the company. Then what is the value? What is the gross carrying value of these items? You can see the items are too big, 280 crores, 105 crore. These are the comparative number. In the gray, there are comparative number. Okay. Then, so once you have given the description of the immovable property, the gross carrying value of the immovable property, you have to provide, if it is not held in the name of the company, whose name, under whose name these properties are held, right? So like in the first two cases, they have given not applicable. Probably they are not able to identify because these are coming since March 1928 or January to 1960. So the first property is before independence, right? The second one is from 1960. They are not able to, because there are a lot of merger, demerger probably. So the company is not able to identify in absence of the adequate records that these properties belongs to whom, right? So held in the name of like erstwhile Tata Steel BSL Limited, Bhushan Steel Limited, Bhushan Steel and Strips Limited, Tata SSL Limited. Okay. So friends, these are, then you have to provide then in whose name this property are held. Then whether these person, the property are held in whose name, whether in the name where the property is held, whether they are promoter, director, or their relative or employee, whether they are promoter or director of the company, whether the property is held in the name of the promoter or director of the company, or the relative or employee of the promoter or director, right? So you can see the answer is no. You have seen some movies and some series, and you have heard in the news that the bureaucrats or the government officials, if they have to take a bribe, they invest in the properties, but they cannot take the property in their name. So they are taking the property in the name of gardener, cook, right? Cleaner, servant, driver. Okay. So here they are also asking whether the property is held in the name of promoter or director or their relative or employee, right? Then property held, that is date of the capitalization provided in range. Okay, so they have given in the range. So the property held, okay, in from which date these properties are held in the company, which are not where the name, where the title deed is not in the name of the company. Property held since which date? Okay, so they have given the date also. Then reason for not being held in the name of the company. Like in the first two cases, they have transparently written title deed not available with the company. Then for the second case, they have told for certain properties acquired through amalgamation or merger, the name change in the process of the company is pending, right? The name change process is pending. This is what they are saying. Okay. So friends, this is what they are talking about, disclosure of immovable property. Then disclosure with respect to fair valuation, revaluation. Okay. Like if the company has done the revaluation and the revaluation impact is more than 10%, the company has to disclose whether the company has revalued its property, plant and equipment from the registered valuer, Okay. Then loans or advances granted to promoter, director, KMP and the other related parties Okay. If the company has given a loan or advance to promoter, director, KMP or the related party, so the company has to disclose, right? The company has to disclose whether this, the person to whom the company has given the loan or advance, whether the person is promoter, director, KMP or other related party or related party. Okay. Promoter, director, KMP or related party. Okay. And amount of loan or advance in the nature of loan outstanding, right? So amount of loan or advance in the nature of loan outstanding. What is the outstanding balance on 31st March? Okay. Okay. And percentage of the total loans and advances in the nature of loan. For example, the outstanding loan given to the promoter is 100 crores. And the total loan given by the company to everyone else, right? So basically the total portfolio of the loan given by the company, the total loan outstanding of the company is 1000 crores. So what is the percentage of the loan lying with the promoter? 10%. 10% is the percentage. Okay. Right? Okay. The following disclosures shall be made where loans and advances are in the nature of loan granted to promoter, director, campaign, the related party, and which is repayable on demand and without specifying any terms or period of repayment. Okay. Then for CWIP and intangible asset under development, you have to give the aging, all right, for 1 to 2 year, less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year, and total, right? And this aging needs to be provided for the project in progress and the project already suspended. And friends, another aspect is also required to be given. If there was a budget overrun, there were a lot of government infra projects, right? The private party took the projects like real estate builder. They started booking the flats, right? And what they do, they commit you that we will provide you the flat in 4 years. But they took 10 year, 15 year, 20 year, right? Because whatever money they received in advance, they put the money in the extravagant expenses, their foreign travel, advertisement, buying other land, buying own properties. Okay. So every time there will be a overrun, there will be a time overrun and there will be a cost overrun every time. There will be a time overrun and there will be a cost overrun. Okay. So now looking at that, lot of buyers and lot of customers have suffered due to the time overrun and the cost overrun by these companies. So they have also told that in case of capital work in progress, you have to provide first of all aging of the capital work in progress, which is within 1 year, uh, right? 1 to 2 year, 2 to 3 year, more than 3 year for the project in progress and project temporarily suspended. And in case it is overrun, so you have to provide the time overrun and the cost overrun. Time overrun and the cost overrun. For example, in case completion is overdue matlab it was supposed to be completed within 5 years, but it took 7 years. So it was overdue or exceeded its cost compared to the original plan. The budget was 100 crore. Now it is moved to 150 crore. Okay. So in that case, you have to provide the aging also to be completed in less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Okay. Project wise detail. You can see here. In the Hindustan Unilever, they have given the disclosure of project in progress, project temporarily suspended. Okay. Then they have given the detail project which have exceeded their original timeline. It is time overrun. And project which have exceeded their original budget, 2 million, 2 million or 2 crores, right? So it is cost overrun. Then they have given the detail, the site-wise detail under progress, temporarily suspended. Kolkata factory, Assam factory, Kandla factory, Rajamundry, Khamagaon factory, Gandhidham factory, okay? And this was supposed to be completed in less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year, and there was a time overrun or cost overrun. Okay, right? So this is what it is given. Detail of CWIP which has exceeded the cost. So they have written there were no material projects which have exceeded their original plan cost as on 31st March 2021. Okay. Then Benami property. Friends, lot of Benami property has started digging out. So the schedule 3 has given the disclosure in the Benami property also. This disclosure is required in the Caro also. Friends, now you must have a question, sir, why these details are captured in schedule 3 and Caro both? Friends, do you know? The Caro came before schedule 3. There was a major amendment in Caro which was proposed to be implemented from 2020, which was proposed to be implemented. The auditor lobby started crying. The auditor lobby started asking, tell me one thing. They started asking, tell me one thing. We are the auditor, not the astrologer, right? Being an auditor, auditor has to provide a disclosure on the disclosure of Benami property. Disclosure of Benami property, right? They are saying we are not the astrologer, we are the auditor. If a property is Benami, how can we be able to know it is a Benami property? We are the auditor. We are going to the company places only for 15 days to 1 month, and we are completing our auditing, and we are completing our audit, and we are issuing the report. We are completing our audit and issuing the report. So the question is, how come we be able to know, right? So they raise this, they raise this concern. This concern was well understood by Ministry of Corporate Affairs also. So there was a huge requirement which came in the Caro reporting by the auditors. Okay. You have to disclose this, you have to disclose that in your Caro report. They are saying if management will not report in their financial statement, how can we be able to report in the Caro reports? Right. So friends, in line with that, Ministry of Corporate Affairs has amended the Schedule 3 and whatever requirement was there in Caro, they have also made the companies responsible for by way of putting these disclosures in the annual report. Okay. So that is why these additional requirements have been come. These additional requirements have come. That's how it has come. Okay. So this detail of Benami property is given. You just need to read it, right? Not very much relevant. You just need to read it. Okay. So detail of property, amount, detail of beneficiary, etc., etc. Okay. Okay. Right. Now, friends, disclosure with respect to borrowing from banks or financial institution. This is a classic example, and you guys have seen in your articles in days also, or you must be seeing it also. So, friends, in the Caro, the auditor has to disclose if the company has taken a borrowing from banks or financial institution, whatever quarterly returns, the company is filing with the bank in lines with the requirement of the loan agreement, the loan covenants. So quarterly return, statement of current assets, debtors, inventory, right? Your creditors, if you have taken a cash credit limit, bank OD or term loan from the bank, you have to submit some quarterly returns on a quarterly basis, or you have to file your debtor statement, stock statement, your cash statement, your creditor statement to the bank on a quarterly basis. Now, there were companies which are private limited, okay, and in the private limited company there was no requirement of publishing the quarterly results, and the auditor is only coming in the year end. Auditor is always coming in the year end to complete the audit and to issue the report. Now what management did? Management has filed the quarterly returns or the statement of debtors, creditors, stock statement, cash statement on 30th June, 30th September, 31st December. Management has submitted. So management has submitted on the provisional basis, or management has just done some calculation and submitted. After that, post that, management has put the backdated entries also. So the statement which was filed at that point of time and statement which has to be filed means the number in the books of accounts as on 30th June and the statement filed is not correlating. It is not reconciling, not coinciding. So the auditor had to report whether quarterly return or the statement of debtors, creditors, stock statement filed with the bank are in agreement with the books of accounts. If not, summary of reconciliation and reason for discrepancy needs to be disclosed. Now, friends, since I told you the auditor for unlisted entity, they are not visiting on a quarterly basis. Probably they are not doing audit on a quarterly basis. So how do they confirm this? So then this requirement was captured in the notes to the financial statement, where the company has to disclose if we have some loan covenants, right? We have taken a loan, there are loan covenants. So basically, whether our quarterly statements are reconciling with the books of accounts or not at that point of time, right? If not, what is the material, whether there is a material discrepancy, then you have to provide a summary of reconciliations as well. And my dear friends, in Caro, the requirement is only there if the limit, if the banks or financial institution has given the borrowing for more than 5 crore. But in Schedule 3 disclosures, in notes to accounts, financial statement, this disclosure requirement is even for 1 rupee of borrowing. Okay. Then there is a willful defaulter. If the company is declared a willful defaulter by any bank or financial institution, then the disclosure is required. Date of declaration is a willful defaulter, detail of defaults, etc., etc. Relationship with stock of companies. Again, you must have seen the Harsat Mehta series. You have seen a lot of series or movies where there will be defunct company, sick companies, okay, paper companies. So I will not say struck of companies are the paper company, but government wants to tighten the governance on these struck of companies. So what government did? Put a government put a disclosure requirement on every company who is following this division 2 to schedule 3, who is following this schedule 3. Government put a requirement that you have to provide some disclosure in the notes to accounts. What are the disclosure which is required relating to struck off company? What is struck off company? Struck off company is a company whose name is struck off from the register of the members, from the register of the Companies Act. Okay. So first if you have a relationship with the stock of company, relationship means relationship does not mean related party. Relationship means, for example, he is your customer, he is your vendor, he is your supplier, he is your shareholder, that way. Okay. So name of the stock of company. Then the nature of transaction with the stock of company, investment, receivable, payable, shares held. Then outstanding balances on 31st March and relationship with the stock of company, name of the stock of company, nature of transaction with them, outstanding balance, and relationship with the stock of company. Relationship means customer, vendor, supplier, shareholder, that way. So let me show you a real life example of Tata Steel Limited. So they have disclosed it. Disclosure for stock of companies, name of stock of company, nature of transaction, sale of goods, purchase of goods, rendering of services, subscription to equity shares. This is the balance, outstanding balance, right? Current year, comparative year end, relationship, customer, vendor, advance to vendor, equity shareholder, right? These are the disclosure which are required. And then they have given the details of other stock of entities holding equity shares, right? So they have given this other entities disclosure separately, right? Because there are a lot of shareholders who are holding Tata Steel shares and they are stock of companies, okay? Then registration of charges or satisfaction with registrar of companies. Okay. Whether any charges or satisfaction yet to be registered with ROC beyond the statutory period of 30 days or whatever it will be. So that is required to be disclosed. Compliance with number of layer of the companies. Okay. So that is also required to be disclosed, and compliance with approved scheme of arrangements. So basically, have you followed the Indian accounting standard for accounting the scheme and arrangement that is required to be disclosed. Friends, most important, 11 ratios. 11 ratios are given in the division 2 to schedule 3. Now, companies are also required to provide the disclosures of 11 ratios: current ratio, debt equity ratio, debt service coverage ratio, return on equity ratio, inventory turnover ratio, trade receivable turnover ratio, trade payable turnover ratio, net capital turnover ratio, net profit ratio, return on capital employed, return on investment. The company has to disclose these 11 ratios, and company is required to explain the numerator and denominator used in the ratio. Let me show you the real life example from Infosys. So these 11 ratios, what is the numerator, what is denominator, what is the ratio which is coming out for current year and comparative year, and where the variance, where the variance is more than 25%, then you have to give the variance also, and wherever the variance is more than 25%, you have to give the disclosure of the reason for the variance also. Okay, like they have given the disclosure, they have given the reason for the change in variance for more than 25%. Okay, so the company shall explain the items included in numerator and denominator for computing the above ratio. Further explanation shall be provided for any change in ratio by more than 25% as compared to the preceding years. Okay, so this is nothing. And friends, this is what we have completed as a division 2 to schedule 3. Friends, this universe of schedule 3, 17 questions which I have told you, I will share the word file along with the answer for your ready reference. Friends, you just need to refer this division 2 to schedule 3, right? So what we have covered, we have covered the format of the balance sheet, format of the P&L, we have covered the format of statement of changes in equity, we have covered some critical questions about schedule 3 and Ind AS. If there is a conflict, which will prevail, schedule 3 or Ind AS will prevail. We have covered the rounding of guidance, we have covered the current maturity of long-term debt will be the part of short-term borrowings. We have covered the aging related disclosures for debtors, creditors, and capital work in progress. We talked about promoter shareholding related disclosure. We talked about stock of company related disclosure. We talked about immovable property disclosures. So I have shown all this ratio related disclosure. I have shown all this disclosure along with the real life examples. Thank you so much. We have completed division 2 to schedule 3. Now we will be covering in dash 1 after the break. Let's have a break, right? Let's have a break, my dear friends. And it's 8:31 now. So we will start at 8:41. Okay, break start. me a second. Let me open my presentation. Just a minute.
सर,
Yes.
ये आपने नंबर भेजा कुछ?
नहीं नहीं, मैंने वो रिपीट ही किया। मैं ये देखने की कोशिश कर रहा था कि ये कॉपी हो रहा है या नहीं हो रहा नंबर।
ओ,
वो
तो सर
मीटिंग आईडी,
लिंक कभी शेयर करेंगे आप?
मीटिंग आईडी है ये। हाँ,
हम्म।
ये कब करना है आप बता दीजिए, मैं कर दूंगा। आई थिंक
हम्म।
लास्ट लास्ट हाफ एन आवर में करना है ना।
हाँ हाँ, 9 और 9:15 पे कर दीजिएगा सर।
ठीक है, मैं कर दूंगा। यस, आई होप दिस प्रेजेंटेशन इज विजिबल। यस, ओके। फ्रेंड्स, so we have covered this division 2 to schedule 3. Now we are going to cover Ind AS 1 presentation of financial statements, right? So we understood that the schedule 3 provides the format. Format for what? Format for balance sheet, format for P&L, format for SOC, and some notes to accounts and notes to accounts as well, right? Notes to accounts are of two types. Number one, balance sheet and P&L related breakups. When I say notes to accounts, it is balance sheet and P&L breakups. Okay, breakups and balance sheet and P&L breakups, and the other regulatory information. For example, other regulatory information. For example, aging information, which is aging of debtors, creditors, aging of CWIP, right? Stock of companies related disclosures, promoter shareholding, willful defaulter, benami property. Okay. So the loan covenants related disclosures. So those disclosures are also there. Statement of cash flow is not been dealt by Schedule 3. It has been dealt by Ind AS 7, which we will cover later on. Later on means not today, in the subsequent sessions. Now, quickly we'll discuss what is the agenda of this standard Ind AS 1. Okay. Friends, Ind AS 1 talks about the objective and scope. What is the objective of Ind AS 1 and what is the scope of Ind AS 1? If I talk about typically a structure of the Indian accounting standard, it starts with the objective. Why this standard has been introduced? It starts with the objective. Why this standard has been introduced? Then it talks about the scope, where this standard is applicable. For example, when you read TPE standard, it says that the objective of Ind AS 16 is to prescribe the accounting and disclosure related requirements relating to property, plant, and equipment. Right? So objective and scope. Then after objective, then it also provides what are the scope of this standard. Ind AS 16 is applicable to this, excluding this. Okay. Then it gives you the recognition related condition, measurement related condition, presentation related aspects, and disclosure related aspects. So the first item is objective and scope. Then coming to Ind AS 1, to be specific, this standard talks about purpose of the financial statement. What is the purpose? Why we are preparing financial statement? What are the components of the financial statement? While we have already covered the component, balance sheet, P&L, statement of changes in equity, statement of cash flows, notes to accounts, then few definitions, then overall consideration means features, general features. Overall consideration means general features. What are the general features of the financial statement? Then structure and content, right? Structure and content. Okay. So friends, structure and content means what is the structure of your balance sheet, P&L, notes to accounts, statement of changes in equity? What should be the minimum content which should be there in the balance sheet, P&L, cash flow, statement of changes in equity, and notes to accounts, right? While this standard does not deal with the cash flow directly, this standard refer for cash flow statement, this standard refer Ind AS 7. Okay. Now it's all theoretical. It's all theoretical, right? So objective of Ind AS 1. What is the objective of Ind AS 1? To prescribe the basis for presentation of general purpose financial statement. To prescribe the basis for presentation of general purpose financial statement. Friends, let me make you guys understand this line with the help of an example. Mr. Mukesh Ambani, who is chairman and managing director of Reliance Industries Limited. So what he did, he called his CFO. He called his CFO and he asked that I need a balance sheet. I need a balance sheet where you have to give me the first line item should be not property, plant and equipment. The first line item has to be trade receivable. Okay. The first line item has to be trade receivable. Just give me a second. Mr. Ambani told his CFO, I need a balance sheet where the first line item should not be PP, it should be trade receivable. And in the balance sheet, on the face of it, there should be two line item of trade receivable. Trade receivable constitute top 5 trade receivables, right? And the other trade receivables. And then you need to give me the property, plant and equipment. Again, two line item of PP. Number 1, the PP belongs to telecom sector. You need to show me separately, and the PP belongs to other sector. You need to show me as a separate line item. So friends, Mr. Ambani is giving some instructions to Mr. CFO, and the question is whether the CFO will prepare that financial statement or not. Of course, that financial statement is not in line with Schedule 3, not in line with Ind AS. My objective type question to all of you, whether CFO will prepare that financial statement or not. Friends, can he say no? He will prepare, but he will give a disclaimer. He will say that, sir, these are the financial statement as desired by you, but these financial statement are not in compliant with the regulations, with the Companies Act, with the Schedule 3, with the Indian accounting standard. So these financial standards are the MIS financial statement, right? Ind AS 1 is not applicable to these financial statement. These are tailored made. These are customized. These are MIS. Okay. So at the same time, if I am the shareholder of Reliance, Karan is the shareholder of Reliance, Monica is the shareholder of Reliance, Rajat is the shareholder of Reliance, we 4-5 people are shareholder of Reliance. We are also asking such balance sheet which Mr. Ambani has asked to CFO. Whether CFO will provide such balance sheet to us, answer is no, never. What CFO will provide? CFO will provide us a balance sheet, a financial statement which is circulate to the entire universe, right, in the form of the annual report. And that financial statement, that balance sheet is in compliance with Indian accounting standards in Schedule 3 and the other related compliances of Companies Act and SEBI regulations. Okay, right? So this Ind AS 1 and these kind of financial statement is known as a general purpose financial statement, which is in compliance with the country's applicable GAAP and applicable regulations. These are known as a general purpose financial statement, and Ind AS 1 is only applicable to the general purpose financial statement, not the tailored made financial statement, not the customized financial statement, not the MIS financial statement. Okay. This standard ensure comparability. This standard ensure comparability. This standard ensure comparability with entities' own financial statement of previous periods, right? With entities' own financial statement of previous periods. Okay. So this standard gives you some guidance. It talks about the rule of consistency. It talks about the rule of comparability. For example, your accounting policy has to be consistent from one period to another. Your presentation related aspect has to be consistent from one period to another. Your numbers should be comparable. Okay. So this standard ensure comparability with entities' own financial statement of previous periods. With entities' own financial statement of previous periods. Okay. And with financial statement of other entities and with financial statement of other entities. Okay. So friends, like this standard gives you the minimum content on the face of the balance sheet. So since Ind AS is applicable to all the listed companies, so all the listed companies are following Ind AS 1. So the result of one entity is comparable to the result of other entity also within the same sector. Okay. This standard set overall requirement for the presentation of the financial statement, guideline for their structure, minimum requirement for their content. This standard set overall requirement for the presentation of the financial statement. Overall requirement. What are the general features? What is the minimum content? Okay. It also provides guideline to their structure. It does not provide you format. It provides you guideline for the structure. It does not provide you the format. It provides the guidelines. It provides the guidelines. Okay. Friends, it also provides the minimum requirements for their content. Like when we will cover balance sheet, we will cover what are the minimum requirement on the face of the balance sheet. Okay. So this is the objective of Ind AS 1. Moving further, scope of the standard. What is the scope of the standard? Whether this standard is applicable only also for the general purpose financial statement or this standard is also applicable for the customized financial statement. No, this standard is only applicable for preparation and presentation of general purpose financial statement in accordance with Indian accounting standards. Okay. Other Ind AS, they sets out the recognition, measurement, presentation and disclosure requirements for specific transaction and other events. Like Ind AS 1. Ind AS 1 balance sheet presentation. It has given you a separate line item deferred tax asset, deferred tax liability to be presented on the face of the balance sheet. To be presented on the face of the balance sheet. But whether Ind AS 1 talks about that how this deferred tax is going to be computed, right? What is meant by temporary differences, right? So where the deferred tax, when the deferred tax is going to be recognized, what are the disclosure requirement of deferred taxes? Answer is no. It is given by Ind AS 12. Ind AS 12 gives a detailed guidance on the recognition, measurement and disclosure of deferred tax asset and deferred tax liability. Ind AS 1 only provides the presentation requirement. Okay. It gives you, tells you that in the P&L you have to show the current tax and deferred tax as a separate line item. In the balance sheet you have to present deferred tax asset and deferred tax liability under non-current asset or non-current liability as a separate line item. So this is what it is talking about. Third, it is not applicable to structure and content of condensed interim financial statement under Ind AS 34 except for general features of financial statement, right? It is not applied to structure and content of condensed interim financial statement under Ind AS 34 except for general features of financial statement. Friends, you know, listed companies are publishing their quarterly results also, right? They are preparing their condensed interim financial statement. Like in accounting standard, there was AS 25. AS 25 provides you the requirement relating to the condensed interim financial statement. In Ind AS, it is Ind AS 34. So Ind AS 34 gives you the structure and content of condensed interim financial statement, right? Ind AS 34 gives you. So friends, so this standard is not applicable to condensed interim financial statement as far as structure and content is concerned. But as far as general features of the financial statement is concerned, this standard is equally applicable to condensed interim financial statement. What is interim financial statement? What is full financial statement and what is interim financial statement? Full financial statements, right? Interim financial statement. So full financial statement is, for example, for the year end. Okay, and this is for the quarter 6 month. So interim financial statement are the financial statement which are less than 12 months, less than year financial statement. Okay, right? So, but as far as general features are concerned, what could be the general feature? For example, the financial statement has to be prepared on a going concern basis. So, sir, whether financial statement has to be prepared on a going concern basis only for the year end financial statement? Answer is no. Even for the quarterly financial statement, all these listed companies which are preparing their quarterly financial statement, which are publishing their results, if there is an impact on going concern, they have to disclose it. Okay. So, friends, so like general feature, going concern, accrual basis. Whether only year end financial statement are required to be provided on an accrual basis? Answer is no. Answer is no. Even quarterly financial statement are required to be prepared on accrual basis. Accrual basis is the basic accounting feature, right? So it's a general feature of the financial statement. Comparability, whether only year and financial statement are required to be have a comparative period? No. Even all these interim period are required to have a comparative period. Okay. So these kind of general features are equally applicable to the interim financial statement also. This standard Ind AS 1 applies equally to all entities, including those that present consolidated financial statements. Sir, whether this Ind AS 1 is applicable only to the presentation of standalone financial statement or consolidated financial statement also. This standard is applicable to the consolidated financial statement also. Right? This is applicable to the consolidated financial statement as well. Okay, so this is the scope of the standard. This is the scope of the standard, my dear friends. Right, this is the scope of the standard. Let's move further. Talking about some definition, general purpose financial statement we understood. General purpose financial statements are intended to meet the needs of the users who are not in a position to require an entity to prepare reports tailored to their particular information needs. Right? So basically, the general purpose financial statement are those financial statement which is equally applicable to all, which serves the purpose of the user of the financial statement who are not in a position to ask the specific kind of a disclosures to the from the company, right? So normally speaking, the financial statement which has been prepared in compliance with Companies Act, which is Schedule 3, Ind AS, and if listed companies, SEBI regulations also, right? And which is published and which is filed with MCA and which is available to all, right? Ind AS. Indian Accounting Standard are the converged version of IFRS prescribed under Section 133 of Companies Act 2013. My dear friends, I just want to clarify under this section 133 of Companies Act 2013, under this section 133 of Companies Act 2013, accounting standard as well as Ind AS both are notified. AS and Ind AS both are notified under section 133. Okay, right? So what is Ind AS? Ind AS are the converged version of IFRS standard which are prescribed under section 133 of Companies Act 2013. Hmm. Friends, you will read the word material at so many places in Ind AS. Sir, is there any threshold of materiality is given? Right? No. There is no threshold of materiality is given. So what is the definition of material? Standard says that an information will be considered as material if the omission, misstatement or obscuring can reasonably affect the decision making capacity of the primary user of the financial statement. You remember when I covered the conceptual framework for financial reporting, I have covered the word primary users. Can anyone tell me what are the primary users of the financial statement? Primary users are investors, lenders and creditors, right? So primary user means they are the one who will always use the financial statement. Okay. So primary user, investor, or investor means existing investor as well as potential investor. Lender who has given a debt to the company, creditor who has supported the company by giving the goods and services on credit basis, by giving goods and services on credit basis, right? So information will be considered as material if omission, misstatement, or obscuring can impact the decision making capacity of the user of the financial statement. Can impact the decision making capacity of the user of the financial statement. Okay. Okay. Is that clear? Investors, lenders, creditors, right? So friends, what is meant by omission? Omission means unintended errors. Okay. Unintended errors or unintended. Omission means not to give any information which is unintentional, which is not intentional, unintentional. Misstating. What is meant by misstating? Misstating means producing false facts. Okay. What is meant by obscuring? Obscuring means scattering the facts at a multiple place so that the user will not be able to make out the final outcome of those facts, right? So let me give you an example for each and every aspect of it. What is considered as a material? There is an investor. Investor wants to invest 500 crore into a textile company. 500 crores. There are two companies, company A and company B. There are two companies. So this company A and company B, they are identical in all the aspects. Company A has a revenue of 10,000 crore. Company B has a similar revenue. Company A has a profit margin of 20%. Company B also has a profit margin of 20%. Both are cash rich company having a sizable kind of orders in hand. So company A, company B, they both are like the twins. Okay. Company A does not have any contingent liability. Does not have, and hence they haven't disclosed. Company B has contingent liability, but they decided not to disclose the contingent liability. Company B has a contingent liability of let's say 100 crores, but they decided not to disclose the contingent liability. My dear friends, tell me, if the company B would have disclosed the contingent liability, if the company B would have disclosed the contingent liability, don't you think this will impact the decision making capacity of the user of the financial statement? So the investor who wants to invest 500 crores, he will quickly say that I go with company A, or still if he want to go with company B, he will factor this 100 crore of exposure which may arise in future, and accordingly he will do the valuation of the company, and accordingly he will invest in the company. Yes. So they omitted this liability, or they misstated the liability. For example, what is misstated? They disclose the contingent liability, or instead of disclosing the contingent liability, they have written a line. As of today, the company does not carry any exposure, right, which may impact the company, or which is having any outflow in the company, which is resulting into the future outflow of the company. Friends, in this case, they are misstating it. They are misstating it, right? They are not giving the correct information and the right information. Third, the company has a contingent liability, or company has got some litigation issues. The company has got some demand orders from the income tax department, right? So instead of showing it as a contingent liability, they scatter the information at multiple places, right? And if some regulator will ask, they will say that yes, we have disclosed. You can see that, because management knows, auditor knows that where this information have been scattered. But the user of the financial statement, being a I would say innocent user, he will not be able to make out the impact, because if everything has to be written in a single note, he will be able to make out the impact. But if things are scattered here and there in the financial statement notes to accounts, he will not be able to understand the impact. So friends, this is known as obscuring, and the classical example of obscuring you all have faced in your life. A kid, so एक बच्चा, he appeared in an exam, right? And since he was not having a good preparation, the exam didn't went well. He came to the home and he know that I will fail in exam. He started making some context. He told Papa, today's exam were very tough. Today's exam was very tough, and so I could be able to manage it for 2 hours, but the class was completely empty after 1 hour. Okay, so he made a impression in the mind that the paper was very tough and nobody was able to complete the paper. Second, after few days, he said, Papa, teacher are saying that many students will fail in this exam. Okay, so he has given so many information slowly and gradually here and there that the impact when the result will come and he will get failed, the impact will be obscured, because there was in the mind of the father that he may got a very low score or he may fail also. Okay, means the information has to be obscured, the information has to be feeded at a multiple time, at a various time, at a various places. Okay, so this is an example from the real life on obscuring, I would say. So omission means not to provide, misstatement means wrongly provide, and obscuring means providing a complete information into bits and pieces, right? Okay. Purpose of the financial statement, my dear friends, structured presentation provides it provides the structured presentation. So the purpose of the financial statement is it should provide the financial position of the entity in the form of balance sheet. It provides the financial performance of the entity in the form of P&L and P&L and statement of changes in equity, right? So statement of profit and loss and statement of changes in equity. So P&L provide the financial performance. This balance sheet, it provides the financial position. Balance sheet is always as on date. Balance sheet is as on date. Your P&L and statement of changes in equity is for the year ended. For the year ended. Okay. So P&L provides the financial performance. Standard on changes in equity provides the shareholder funds performance. Cash flow. So cash flow, statement of cash flow, it provides the liquidity performance, that how much company is able to generate cash from the operations, from the operating activity, from the investing activity, from the financing activity, liquidity performance. Okay, liquidity performance. Now friends, coming to the component of the complete set of financial statement. Okay, as we discussed balance sheet, we have seen the balance sheet of Indigo Airlines also. Balance sheet start with your asset side. Then there is a non-current and current classification. Then there is a financial asset and financial, non-financial classification. Then there is a equity, there is a liability, non-current, current, financial, non-financial. Okay. And balance sheet has 1 year comparative also. Statement of profit and loss. My dear friends, can you tell me what is a new section in the statement of profit and loss? The new section in the statement of profit and loss is other comprehensive income. I will discuss this in detail in the next class when I will cover statement of profit and loss. Statement of changes in equity. When I say statement of changes in equity, it's the equity share capital and reserves and surplus also. Friends, whether this statement of changes in equity, it's a new item in Ind AS. Whether this item was there in accounting standard financial statement also, yes. In IGAP financial statement also this item was there. Okay. In IGAP financial statement, this changes in equity share capital and changes in reserves and surplus were part of the notes to accounts. Okay. So equity share capital and reserves and surplus. Okay. Then statement of cash flows. Statement of cash flows is also there. Statement of cash flows. Okay. So friends, a statement of cash flow has been, the guidance is given under Ind AS 7, but yes, it is again a component of the financial statement of cash flows, right, which is splitted into operating activity, investing activity, and financing activity. This I will cover in Ind AS 7 class. Then notes to accounts. Notes to accounts includes your accounting policies and explanatory notes. Explanatory notes relating to the balance sheet, P&L, and those items which are required under a respective Ind AS and which is not part of your balance sheet and P&L. For example, capital commitment, contingent liability, related party disclosure, actuarial disclosure, segment reporting. These are required by a specific Ind AS, right? And then there is a comparative information. 1 year comparative is also required to be given. Comparative information is also required to be given here. Okay. So friends, 5 component balance sheet, P&L, statement of changes in equity, statement of cash flow, and notes to accounts, right? And my dear friends, What is the most bulkiest area in the financial statement? Which component is the most bulkiest component? Balance sheet is hardly 1 or 2 page. P&L is again 1 or 2 page. Statement of changes in equity is again 1 or 2 page. Statement of cash flow 1 or 2 page. But this notes to accounts is a very detailed, right? This notes to accounts provides qualitative and quantitative information. Okay, right? Is that clear? Friends, uh, I am sharing a meeting ID. Okay, so I am writing on the screen. Anyone who wants to join live, right? Anyone, he can join using this meeting ID. So I am writing the meeting ID on the screen. You can join using this meeting ID 898 on the Zoom, 898 0520 and 4455. This is the meeting ID of Zoom, right? Any students who want to join on a live basis, he can come and he can join 898 0520 Okay. Yes. Okay. 898 0520 Any student who wish to join using this meeting ID, he or she can join. Okay. Yes. Now moving further, after comparative information, so then the third balance sheet. Okay. What is this third balance sheet concept? Friends, as we are aware, we have only two balance sheet. Right? Current year balance sheet and comparative year balance sheet. In Indigo's balance sheet, I have shown you. If I will again show you the Indigo's balance sheet, you can see the current year, sorry, it's a P&L. Let's go to the balance sheet. If you see here, the balance sheet as at 31st March 2025 and balance sheet as at 31st March 2024. Right, these are the two balance sheet as at 31st March 25, 31st March 24. So current year balance sheet and comparative year balance sheet. My dear friends, what is the third balance sheet? Which is required? So first of all, let me talk about the third balance sheet. Okay. What is this third balance sheet? This third balance sheet is nothing. This third balance sheet is opening of the comparative period balance sheet. For example, in this case, the financial year was 24-25. Okay. 24-25 was the financial year. I hope my balance sheet is visible. Is it visible, guys? Yes? Okay. Yeah. So financial year was 24-25 and your balance sheet date was 31st March 2025, current year balance sheet. What is the comparative year balance sheet? What is the comparative year balance sheet? What is the comparative year first of all? Comparative year is 23-24. Okay, 23-24 is the comparative year. So 31st March 24 is the comparative year balance sheet. Okay. Now, if the comparative year is 23-24, what is opening of the comparative period date? What is the opening date of the comparative period, friends? Can you please write on the chat box? What is the opening date of the comparative period? Comparative period की opening date क्या होगी? What is the opening date of the comparative period? भाई अगर साल 2023-24 है तो पहली तारीख कौन सी होगी? यू आर एब्सोल्युटली राइट स्वर्णलता. The opening date will be 1st April 2023. 1st April 23 will be the opening date, right? So this third balance sheet of 1st April 23 also required to be prepared. When this third balance sheet is required to be prepared? This third balance sheet is required to be prepared largely in two situations, right? While three situations are given in the standard, but largely this is required in two situations. What are these two situations? Number one. The first situation is when there is a correction of prior period error. Just a minute. Yes. When there is a correction of prior period error, right? And when the company is changing the accounting policy retrospectively, or when there is a reclassification in the financial statement. Okay. So let's understand one by one. So one thing we understood, we have to provide a third balance sheet, which is opening date of the comparative period balance sheet in three circumstances: when there is a change in accounting policy retrospectively, when there is a correction of prior period error, and when there is a restatement, when there is a reclassification in the financial statement. Let me explain you this concept with the help of an Excel file, right? I hope my Excel file is visible to all of you. Is it visible, Excel file? Whether my Excel file is visible to all of you, yes or no? Visible, okay? Yes. A Limited purchased a machine for rupees 1 lakh. A Limited purchased a machine for rupees 1 lakh on 1st April 2016, having a useful life of 10 years. Okay. The accountant has wrongly passed an accounting entry for rupees 10,000 instead of rupees 1 lakh. The accountant has wrongly passed the accounting entry, right? So on 1st April 2016, what accounting entry was supposed to be passed? Machine account debit to bank account? Yes or no? Or to cash account? Machine account debit to cash 1 lakh. But accountant has wrongly passed the entry of 10,000 rupees instead of 1 lakh rupee. So the entry has been passed machine account debit to cash account by 10,000. So what happened due to this error? Whether this error is compensating error or non-compensating error. This error is compensating error. What is meant by compensating error? If you see, this error resulted in understating one asset and overstating another asset. For example, machine was understated by 90,000. Instead of 1 lakh, machine was measured at 10,000. And cash was overstated. Cash was overstated by 90,000. So the cash was, instead of reflecting this cash, instead of this cash would have been lower by 1 lakh, this cash would have been lower by 10,000 only. The cash would have been lower by 10,000 only, right? So machine is understated by 90,000, cash is overstated by 90,000, balance sheet tally. Now, Rachit Gupta is the auditor of this company. Rachit Gupta was appointed in the financial year 2021. So this error was found while auditing the financial statement of A Limited for 2021, right? Suggest the correct accounting treatment in light of Ind AS 1 and Ind AS 8. Sir, you are teaching us Ind AS 1 and this question is talking about Ind AS 8 also. Yes. My dear friends, this concept of third balance sheet, in case of change in accounting policy, correction of error, reclassification in the financial statement, this concept is there in Ind AS 8 also. Same concept, right? So that is why this accounting treatment is in accordance with Ind AS 1 and Ind AS 8. In Ind AS 8, whenever there is a correction of prior period error, whenever there is a change in accounting policy retrospectively, the disclosures are also given on all those three cases. The disclosures are also provided. Okay. Let's solve this question. I hope everybody has understood this question. Yes or no? Have you guys understood this question or not? Yes. Okay. So what we are required to do, we have to see how this error needs to be corrected in the financial year 2021. This error belongs to, let's say, this error belongs to, 5 year ago. This error was in 16-17. We are in 2021. Okay. So how will we correct this error in the financial year 2021? This is the question. Okay. So we understood cost wrongly booked 10,000, machine understated 90,000, cash overstated 90,000. We understood all these aspects, right? Now, what is my depreciation which has to be charged? If everything has to be right, what should be my depreciation? The amount is 1 lakh rupee, life is 10 year. So depreciation to be charged should be 1 lakh divided by 10,000 rupees, right? It has to be 10,000 rupees. It has to be 10,000 rupees. 16, 17, 17, 18, 18, 19, 19, 20, 20, 21 में तो ठीक कर ही लेंगे. 2021 to we have open, right? So Rachit has already plugged this error in 2021. Now, what is the amount of depreciation actually charged? What is the amount of depreciation actually charged? Actually, the cost, the machine was recorded at 10,000 rupees. So 10,000 divided by 10. So the depreciation actually charges 1,000 rupee only. 1,000 rupees only, right? Sorry. And it is 1,000 rupees. Okay. Now, my dear friends, what is the current accounting year in which this error was in this error was identified? What is the current accounting year when this error was identified, my dear friends? What is the current year in which the error was identified? Tell me. The current accounting year, कौन से year में error identify की है रचित ने? रचित, what is the current year in which the error was identified? Rachit, can you please unmute yourself? Are you able to unmute yourself, Rachit? Not yet. Swanlata, will you be able to unmute yourself? Yes, okay. Okay, Rachit, you are there? Yes. So, Rachit, what is the year in which this error was identified? Good morning.
Is 2021.
Financial year 2021, you are absolutely right. Okay. So, Rachit, if financial year 2021 is the year, what is the balance sheet date?
Is 31st March 2021.
31st March 2021, you are absolutely right. And if 2021 is the current year, what is the comparative year? 1920.
1920
2019-20 is the comparative year. What is the comparative balance sheet date? What is the comparative balance sheet date?
is 31st March 2020.
31st March 20. Very good. So 2021 current year, 1920 comparative year, 31st March 21 balance sheet date of current year, and 31st March 20 balance sheet date of comparative period. If 1920 is the comparative year, Rachit, what is the opening date of the comparative period?
1st April 2019.
1st April 2019. Very good. And Rachit, tell me one thing. So, whether balance sheet numbers are brought down and carried forward or not? Whether balance sheet numbers are brought down and carried forward? Yes.
Yes.
Balance sheet number तो brought down and carry forward होते हैं ना? If Tata Steel has purchased a land in
Yes, sir.
1928, टाटा स्टील ने एक लैंड परचेज की थी 1928 में. अगर टाटा स्टील ने नहीं बेचा है, whether that land will come into the balance sheet in 2026 also? Of course, yes. Yes.
Yes, sir.
But whether P&L number carried forward? No.
No.
P&L number never carries forward, right? Only balance sheet numbers carried forward. So asset liability equity balances carried forward. आपका प्रॉफिट कैरी फॉरवर्ड होता है क्या? रिटेन्ड अर्निंग कैरी फॉरवर्ड होता है, राइट? Profit after tax
Yes,
goes
sir.
to retained earnings, and retained earnings is the balance sheet item. Correct? Okay. So
Yes,
now,
sir.
dear Rachit, tell me, if comparative year, so you are into the current year, which is 2021, and you identify this error. Now, this Ind AS 1 and Ind AS 8, which says that you have to correct your balance sheet, right? You have to correct your financial statement. So you need to correct your comparative period also. You have to restate your comparative period, right? In accounting standard, the correction of error was very simple. The year in which you find the error, take the impact in that year itself and show as a separate line item prior period error in the P&L. भाई इस error से गलत क्या हुआ? What wrong has happened due to this error in the P&L?
Depreciation wrongly charged.
Depreciation wrongly charged. Wrongly by what amount? Wrongly by 9,000 every year.
9,000.
Wrongly by 9,000 every year. Yes or no? Yes. So in the last 4 year for which the accounts has already been closed, 2021 accounts are not closed. You find the error. You will correct it. So in accounting standard, in ICAI, what is the total impact of the error? 36,000 for the last 4 years.
Yes, sir.
Yes. So you know what we used to do? In my P&L, we will show this 36,000 depreciation is a prior period item, in the current year column, and of course in my current balance sheet retained earning will be right, my assets balances will be right. This is what we used to do, right? But in Ind AS, Indian accounting standards are the global standards, right? They come from IFRS. They are the global standards. They come from IFRS, right? So they are very stringent. They are very stringent in nature. When I say stringent in nature, it means it says that if you will do all the adjustment in the current year only, your numbers will not look like comparable numbers, right? So what they say, you have to correct your current year, you have to correct your comparative balance sheet also. But for correcting your comparative balance sheet, you need to correct the opening balance sheet of the comparative also. Yes or no? भाई क्लोजिंग बैलेंस शीट को ठीक करनी है, अगर कंपैरेटिव डेट की बैलेंस शीट को ठीक करनी है तो ओपनिंग डेट को भी तो ठीक करना पड़ेगा ना, बिकॉज बैलेंस शीट balances brought down and carry forward, right Rachit?
Yes, sir.
Okay, so the standard talks about giving a current year balance sheet, comparative year balance sheet, and opening date of the comparative year balance sheet, right? So opening date of the comparative period balance sheet, this is known as a third balance sheet, and this comparative and this third balance sheet needs to be corrected. Sir, this 1st April 19 balance sheet, sir, what is this 1st April 19 balance sheet? This 1st April 19 balance sheet is equal to 31st March 2019 corrected balance sheet. You would have prepared 31st March 19 balance sheet in the past, right? But that balance sheet was a wrong balance sheet. Why? Because of this depreciation treatment, because of this machine and the cash balance. So friends, the corrected balance sheet of 31st March 19 is called as 1st April 2019 balance sheet. Sir, whether this 1st April 19 balance sheet is 1st April beginning balance sheet or 1st April end balance sheet means, sir, whether the transaction of 1st April will also come in this balance sheet, answer is no. 31st मार्च को जो रात को 12 बजे की बैलेंस शीट थी ना, वो 12:01 पे 1 अप्रैल 2019 की बैलेंस शीट बनानी है. ओके, कैसे बनानी है? 31st March 19 बैलेंस शीट प्लस एडजस्टमेंट इज इक्वल टू 1st April 19 करेक्टेड बैलेंस शीट. ओके, so it means whenever there is a correction of prior period error, whenever there is a change in accounting policy retrospectively, you have to compute the impact of the error, or you have to compute the impact of the change in accounting policy right from the date of error or date of the change to opening date of the comparative period. So Rachit, in this case, for correcting my opening balances on 1st April 2019, right? How much period should I consider for the correction? How much past period should I consider for correcting my 1st April 19 balance sheet? Tell me. Or anyone who wants to say? Anyone?
3, sir.
3. You are absolutely right. 3. And what is that 3 period? 16, 17, 17, 18, 18, 19. Right? So 31st March 19, from 1st April 16 to 31st March 19, these 3 period financial statements are wrong. What is the wrong? Cash balance is wrong, machine balance is wrong, retained earning is wrong, depreciation is wrong, right? Retained earning is wrong because the profit is also changed. Okay, so what should I do? What should I do? I should correct. I should take an impact of this 27,000 in my opening balance sheet. So once you took an impact, balance sheet number flows. So this 27,000 impact already captured. Then you will correct your comparative number. Then you will correct your current will always be corrected because the numbers are open. Okay. So balance of machine as of 31st March 2019. If everything would have been correct, the gross block would have been 1 lakh. The depreciation would have been 30,000 for 3 years. 70,000 would have been corrected net block. But what is the existing net block? What is the existing net block? 10,000 minus 3,000. 7,000 is the wrong net block. So what is the impact? What is the impact? 63,000 is the impact on the PPNE, right? On the PPNE. Okay. So what is the accounting entry which I will pass on 1st April 19? Machinery account debit. Machine has to be debited by 63,000, right? अगर सब कुछ ठीक होता तो 70,000 होता, बट अभी 7,000 है. So machine should have been debited by 63,000. Then your cash would have been credited by 90,000. Yes or no? You remember 1 lakh rupee you have paid, but you credited 10,000, right, Swanlata? Yes. So to cash 90,000. Machine debit 63,000. What is this balancing figure? What is this balancing figure? 27,000 retained earnings debit. Retained earning is debited by 27,000. Now tell me, what is this 27,000 exactly? What is this 27,000? Swarnlata, can you please tell me what is this 27,000 number? Yes?
1 minute, sir.
Sure.
The difference amount of the machinery
Depreciation.
and yes, sir.
The difference about of the difference of depreciation for 3 years. 9 3s are 27.
Yes,
Right? This 27,000 technically is that only, na?
yes, sir.
Because this depreciation was short charged by 27,000 in 3 years, and that is why your retained earning was credited more by 27,000. Your profit was increased by 27,000, right?
Yes,
Because the depreciation expense has been lower. That is why the profit has been higher. Your retained earning has been higher. So with 3 year depreciation expense, right, you have to debit your retained earning. Okay. Credit your cash by 90 and machine net block will be debited by 63. Is that clear?
yes,
Is this entry clear? Okay. Then in the next year, what will happen? In the next year, you have to correct your depreciation only because the opening balances are corrected. Cash has been corrected, right? So then you need to just correct your comparative balance depreciation to machine. Okay, sir, whether we need to open our old books of accounts, Tally, SAP, ERP, no. You have to pass these entries in the current year only by giving a reference of the past period. Okay, you are not required to reopen your old books of accounts. Your old books of accounts will not be reopened. These are the adjustment entry which needs to be passed in the current year, but giving a clear cut reference to the previous years, so that while taking these adjustments, while giving the adjustment, you can give the adjustment to the comparative period and the opening of the comparative period. Now, what you will do? You will add 63,000.
Excuse me, sir. Shall I ask you a question now?
Yeah, sure.
Sir, you said the adjustment entry for 1/4/2019 should be passed in the current year, like
Yes.
2020.
So let me again explain you, Swanlatha. Can you please keep on mute now? Okay.
Okay.
Yeah. So let me explain it. First of all, what this Ind AS 1 and 8 talks about. This Ind AS 1 and 8 talks about in case of correction of prior period error, in case of change in accounting policy retrospectively, you need to give the third balance sheet. Why third balance sheet is required? It says that in these cases, you need to restate your comparative periods and you need to give the third balance sheet, which is opening of the comparative period. Why? So that from the date of the transaction, from the impact, from the first date of the error, or from the date where you need to take the impact of change in accounting policy till opening of the comparative period, cumulative impact you can take while presenting the third balance sheet of the current year. Okay, that is one. Number two, your comparatives are also required to be restated, comparatives of current year. Okay. Number two, another aspect. So whatever accounts you have filed in ROC, MCA, SEBI, those are not required to be refiled again. So one thing is very clear, till the end of the previous year, whatever has been filed, it has been filed. Is that clear, everyone? Yeah, you are not required to refile the old accounts. If you are not required to refile the old accounts, then don't you think your final books of accounts of the old accounts, doesn't matter right or wrong, it has to coincide with the audited and signed financial statements filed in the last years? Yes or no?
Yes.
Yes, it has to be like that only. Correct? So one thing is very clear, Swanlatha and everyone, old accounts, old books of accounts are not required to be, old books of accounts are not required to be changed. Old audited financial statements are not required to be changed. Okay. Okay. Is that clear? Okay. Now, sir, we need to comply Ind AS 1 and Ind AS 8. So, sir, where we have to do the changes? We have to do the changes in the current financial statement. When I say current financial statement, means current year, which is obviously which is right. And I need to restate my comparative period also. And I need to give the third balance sheet of my opening of the comparative period also, right? So I need to do all the adjustment in the current financial statement. So what I should do? These correction entries I need to pass in current year, but in SAP, Tally, you can write the journals. You can do the reference. You can also insert the reference. Okay. So while passing these accounting entry, for example, you have passed these accounting entry machine account debit to this and this. What you can do? So this accounting entry you have passed 63,000. So 90,000. Okay. So while passing this accounting entry, for example, you pass this accounting entry on 31st March 2021. Okay. You pass this accounting entry, but you will give a reference in Tally. There is a concept where you can provide a reference. Okay. So in the reference, you can write 1st April 2019. Okay. 1st April 2019. 1st April 2019, 1st April 2019. Okay. This is how you can find, you can just put a reference, or in narration, you can put being the correction entry for the period up to 31st March 2019 has been passed. Is that clear, Swarnlata? Is that clear now? Is that clear
Yes.
now? Yeah. So
Only
now,
the narration part is very important.
narration part or reference part. So there is a kind of facility in the ERP or SAP where you can put the reference. Okay.
Yes, sir. And for calculation, we have to take the date as 1/4/2019. Rest all is on 31st March 2021.
Yes, 21, or in the opening of the current year also. For example, you find this error in the beginning itself. So then you will correct that time, right?
Okay.
To the
Okay.
current year. Okay.
Yes, sir.
Yeah. You can keep on mute now. Yes. So 63,000 is the machinery. So we'll add machinery 63,000. We will reduce cash 90,000, right? We will reduce our retained earnings by 27,000. And you can see this balance will tally minus 90 plus 63 minus 27. Okay. Now coming to 31st March 20. In 31st March 20, you will increase your depreciation. You will increase your depreciation by 9,000. 1,000 you have already passed. When you increase your depreciation, what happened? When you increase your depreciation, what happened? So you have increased your machinery balance by 63,000 in the last year, minus 9,000 you have charged depreciation also. So there will be a impact of 54,000 in the comparative restatement. Cash, it will be same. Cash will be the same, right? And in the retained earning, what will be the impact? Minus 27,000 minus 9,000. So these are the balance sheet numbers. These are the as on date balance sheet numbers. Okay. So balance sheet numbers are always brought down and carried forward, na? Right? So that is why you can see the adjustment of 63,000 in the 1st April 19. You can see the adjustment of 54,000 on 31st March 20. Why this number has been reduced? Because there is a 1 year extra depreciation also. This cash balance for every year will be down by 90,000. Okay. And this retained earning impact has to be 36,000 for 4 years, right? Any doubt here? Any question? Any doubt, my dear friends? Shall I show you this entire thing in the real life listed company? दिखाऊं मैं आपको रियल लाइफ लिस्टेड कंपनी की किताबों में ये? You
Yes,
want
sir.
to see? You want to see the impact in your real life? Okay, let me
Yes,
show
sir.
you. Let me show you the impact in the real life balance sheet. Just allow me a second. Let me open the balance sheet of a large listed company. Large listed company. Okay. Day 1. You will be happy to see whatever I have told you. Everything was there in that balance sheet. Very beautiful disclosures, right? Please confirm once this balance sheet of a large listed public sector company is visible. Is it visible?
Yes, sir.
Yes.
Yes,
Okay.
sir.
Great. Great. What is the name of the company? ONGC. Have you heard about this company? Of course, yes. You have heard about this company, ONGC Limited. Everybody has heard about ONGC Limited,
Yes, sir.
right? Okay.
Yes.
Okay. So once again, I am sharing the Zoom ID because somebody has requested to sharing the Zoom ID once again. So Zoom ID is 89805204455. This is the Zoom ID, my dear students. If you want to log in, please log in using this Zoom ID 89805204455. This is 55. 4455. It is 20. Okay. Right. So 89805204455. Okay. Yes, let's move to the balance sheet now. What is the year? 1920. What is the current balance sheet date? What is the current balance sheet date? If year is 1920,
31st March
20.
20.
Comparative. What is comparative?
The 31st March 2019.
19. What is comparative year? 1819. 1819 is comparative
18.
year, na? Yes. If 1819
Yes.
is comparative year, what is the opening date of the comparative year?
1418.
1418. Very good. Very good. Normally balance sheets are 2-column balance sheet or 3-column balance sheet. Always 2-column. Always 2-column. So 3-column balance sheet, third balance sheet is allowed only in special circumstances. What are the special circumstances? Largely correction of prior period error or change in accounting policies, right? Right. Okay. So friends, can you see the ONGC balance sheet as on 31st March 2020? Can you see that? Yeah. I hope you are able to see this ONGC balance sheet of 31st March 2020. Yes, amount in million. 31st March 20, as you rightly mentioned, 31st March 19. There is a star mark on 31st March 19 and there is a 1st April 18 balance sheet also. Why? Why there is a 1st April 18 balance sheet and there is a star mark on 31st on 1st April 18 balance sheet also? Why? Why they have given this balance sheet, third balance sheet? Because here the impact is due to change in accounting policies. The treatment is same. Doesn't matter it is a change in accounting policy or correction of prior period error, impacts are same. Okay. Treatment is same. So what is the meaning of the star mark? Let's look at the meaning of the star mark. Restated refer note number 54 means they have restated their comparative numbers and they have also restated their opening date of the comparative number. They have restated that part also, right? Restated that part also. Okay. Now, let's go to the P&L. If you see the P&L, the P&L is only current year and comparative year and there is a star mark. Why there is not a third P&L? Can anyone tell me why there is not a third P&L? Why only there are two P&L, current year, comparative year? P&L is always for the period, not as on date. Balance sheet is as on date. P&L is for the period. Okay, that is one. Number two, P&L numbers doesn't carry forward. Balance sheet numbers carried forward, right? For example, when I corrected 1st April 18 balances, right? So it was corrected for all the, it was corrected taking the impact of all the past period. But let's say if I'll give you the year ended 31st March 18 balance sheet. So that will only correct 17, 18 number, not 15, 16 or 16, 17 number also. I hope you are able to understand. Being a chartered accountant, I'll not say you are a student, you all are chartered accountant, right? I hope you guys are able to understand these aspects. Can I have a confirmation from all of you on the chat box? You just need to write yes, no, not applicable. Yes. Can I have the confirmation? You understand? P&L is always for the period. Balance sheet is as on date. P&L numbers are never carry forward. Balance sheet numbers are brought forward and carried down. Okay, carried forward. Okay, so that is why there is no third P&L as such. Okay, but there is a comparative period. In comparative period, there is a star mark. Okay, then there is a definition of the star mark. Restated refer note number 54. Restated refer note number 54. Okay. Then friends, statement of changes in equity is there, right? In statement of changes in equity, they have started the balance of 1st April 31st March 18, and they have given the impact of the change in accounting policy. I told you, na, this company has given the third balance sheet because of the change in accounting policy. Then it becomes 1st April 18 number, and then they have given 1819 and 1920. Then there is a cash flow statement also. In cash flow statement, they have given current year and comparative year, and there is a star mark also in the comparative year, and meaning of star mark is restated refer note number 54. Shall I go to note number 54? A beautiful note. You will enjoy looking at the disclosure.
Yes.
Let's go to the note number 54. Disclosure number 50 from a large listed company. From a large listed company. Disclosure H per which Ind AS? Ind AS 8 and Ind AS 1. Disclosure H per Ind AS 8, accounting policy, changes in accounting estimate and correction of errors, and Ind AS 1, presentation of financial statement. This part which you are reading in Ind AS 1, you will revise in Ind AS 8. It is cut, copy, paste. The only thing is in Ind AS 8, the additional disclosures are given, which I can show you right away also. Okay. In accordance with Ind AS 8, accounting policy, change in accounting estimates and correction of errors, and Ind AS 1, presentation of financial statement, the company has retrospectively restated its balance sheet as on 31st March 29 comparative and 1st April 2018 opening of the comparative period, and a statement of profit and loss for the year ended 31st March 19 and a statement of cash flows for the region mentioned below. So friends, in case of third balance sheet, you have to give the reasons why you are restating your comparative, why you are giving third balance sheet. You have to give the reasons to it. Like I can tell you why ONGC did. They changed the accounting policy of the government grant. Okay. So they have given the detailed reasoning that why they have restated their comparative and given the third balance sheet. Now, friends, according to Ind AS 8, whenever you are restating your comparative, you are giving the third balance sheet, and of course you are restating your opening date of the comparative period balance sheet also, you have to give some reconciliation. Why? Let's say Swarnlatha is the shareholder of ONGC Limited. Okay. And her mind is very sharp. She always remember the numbers. So what happened? On 31st March 2020, she got the balance sheet of ONGC. And she was surprised to see the numbers of 31st March 19 and 31st March 18, which is technically 1st April 18. And what she found that the number of property, plant and equipment, for example, it is coming at 96,000 crores, 9,200 crores, 92,000 crores, for example. And she was just thinking after looking at the current year annual report. I'm talking about balance sheet. I have shown you the balance sheet, na? I have shown you the balance sheet where the numbers are coming. मैंने आपको balance sheet दिखाया था ना, जहां पर numbers आ रहे थे, right? This is the balance sheet. So when Swarnlatha is looking at the balance sheet, she was surprised that few numbers are not marrying with the old annual report. Few numbers are not marrying with the old annual report. For example, she was just thinking, oh my God, this is 9643 crores, this is 9250 crores, right? These numbers were more than 10,000. So I think this is wrong. But when she went to note number 54, she got the clarity, right? And how she got the clarity? Let me tell you how she got the clarity. Okay. So when she got to the note, when she went to the note number 54, she found, oh my God, some reconciliation is given. Reconciliation of item of balance sheet as on 31st March 19 and 1st April 18. So what was the previously reported? When she looked at 9,900 crores, she got a sigh of relief. Yes, this is the number which was coming in the last published annual report. Okay, they have done some adjustment and now this number is tallying with my comparative number in the balance sheet. Okay, yes, this number was there in my last annual report. Okay, and this is there. So friends, the balance sheet reconciliation and the P&L reconciliation is required to be given for the for the items which are impacted and for the period which has already been published. So previously reported adjustment restated. 31st March 19, 31st March 18, which is April 18. Previously reported adjustment restated. This is your balance sheet reconciliation. Then talking about the P&L reconciliation. Okay. This is your previously reported number. This is adjustment. This is restated number. Okay. Right. Okay. Then it is your profit. There is a change in the profit also. You can see there is change in the tax expense also. And then there is a change in comprehensive income also for the last year. And even the basic and diluted earning per share reconciliation is also required to be given. Okay, for the last year. A statement of cash flow reconciliation is also required to be given. And you can see for every item, for every adjustment, they have given a note number. And then these adjustments are required to be explained in detail. You can see all these note number 54.5.1, 5.2. So you will be surprised to see in our accounting standard, there is only one line item disclosure. In Ind AS, there is more than 3 pages disclosure on this third balance sheet concept, right? This third balance sheet concept, which will be applicable in case of change in accounting policy and correction of prior period error. Sir, if there is a correction of prior period error and the correction is not material and the error is not material. For example, Reliance Industries Limited. Last year, they made a profit of 96,000 crores. How much crores I have told you? 96,000 crores. They become the first Indian company to cross the profit by more than $10 billion. So Reliance accountant, the accountant of Reliance made an error. He was forgot to record an expense of 1 crore rupee. And Reliance is rounding off its number in crores. This 1 crore rupee is 1 rupee for them. Friends, for this 1 crore rupees of error, where the expense was not recorded, which pertains to last 5 years, right? Whether Reliance needs to be recast its accounts, restate its accounts. Tell me yes or no with your general knowledge.
No, sir.
Answer is no. You are absolutely right. Answer is no. So you are required to give the third balance sheet, restate your comparative, give this reconciliation, explanation, disclosure only when the impact is material. If the impact is not material, you're not required to do anything. Sir, for example, like you said, Reliance has made an error of 1 crore or 10 crore, which is not material, and this error belongs to 2019-20. And they got this error in 25-26. And they forgot to record some salary expenses. So they are not required to do anything. They have to record this expense in the current year, considering current year expense. As simple as that. Okay. Is that clear? So my dear friends, what we have covered so far as of today, we have covered division 2 to schedule 3, and we have covered just a minute.
Okay, sir.
And we have also covered what the introduction of Ind AS 1 to begin with, objective, scope, right? And what objective, scope, and the few definitions and purpose of the financial statement and the component of the financial statement. To be precise, in detail, we have covered with the help of an Excel file and ONGC annual report for financial year 1920. We cover this impact of the third balance sheet also. Yes. Now, if you have any question, over to you. Yes. Yeah, Swanlata, please unmute and ask your question.
Yes, sir. Sir, in the ONGC example, the adjustment was made during the year, sir. Matlab ki previous year, not on the, but for presentation, they have to give the opening comparative.
Yes. So in the books of account, the journal entries are passed in the current year SAP. Okay. But while doing the presentation, the adjustment has been given to the last year numbers for presenting in the current year, not changing the last year. Only for the sake of comparative, they have given the adjustment in these period. Like I have also given the adjustment in my Excel file, na, plus 63,000, right? Minus 90,000. That's how they have.
Yes. And the date was not on 1/4. It was during the year.
It could be at the end of the year also. It could be in the beginning of the current year also. It could be during the year also. That does
On the
not.
date of identification.
Why it does not make any difference, Swanlata? Because this impact pertains to the past years.
Okay.
राइट. इफ इट पर्टेन्स टू द करंट ईयर, तब तो आप कहोगे ना करंट ईयर का इम्पैक्ट तो सर लास्ट डेट के बाद तक ही पता लगेगा ना. करेक्ट. बट
Yes.
it belongs to the last year. So agar, since you are a CA final student, okay, if I ask you what is your score in CA inter, I'm not asking you, I'm just giving an example. If I ask you what is your score in CA inter, it is absolutely handy in your hands. But if I'll ask you what is your score in financial reporting, you will say, sir, मुझे कैसे पता? I will be able to know only when I'll appear in exam and result will come.
Yes.
But for CA inter, if I'll ask you today, tomorrow, yesterday, whenever you are ready with the number, sir,
Yes.
this was my score.
Okay, sir. Thank you, sir.
Yes. Any other question, my dear friends? Any other question? Are you liking the session? Any feedback?
Yes, sir. It is very nice and very practical.
Thank you. Rachit, Ravindra, Mr. Rathore, Rohan, Selendra. Any question from you guys?
No, sir, thank you. It's a good session. Nice to hear you.
So any feedback for any change? Thank you, Ravindra. Thank you for the appreciation and the feedback.
So this Zoom mode should be start now because see going on YouTube.
Yes, I totally agree with you. And even as a teacher, it is difficult for me also, right? Because when a student will not interact, a student will not ask questions, right? So probably it would be monotonous for the teachers also. And I had a discussion with Board of Studies, so they are upgrading, and this Zoom will start probably from the next class. You will be live as good as you are live in for last 40 minutes. You will be live in all the classes, right? You will be directly interacting with the teachers.
Thank you, sir.
Okay. Any other question, my dear friends? Any other question?
Sir,
So, yes.
one thing, sir. The examples you're giving and everything were actually very nice, sir. While
Thank you.
revising the concepts, just to remember these, we need to write the running notes. For that, I'm not finding time. Why? Because you're explaining and I'm listening to that. I'm unable to write the running notes about these examples or the explanation. What can be the solution for that, sir?
See, so basically, I will share my presentation. I will share my Excel file also. Okay. In
Okay.
Excel file, those notes will be there. Okay. In Excel file, the reference of ONGC annual report will be there. Okay.
Okay,
So
sir.
when you use these notes and you will read from the ICAI Board of Studies material, so you will find everything there. You will find
Yes.
everything there. Okay.
Thank
So
you, sir.
like these kind of concept we are communicating. Like I told you, see why this accounting entries can be passed at any time during the current year. I have taken an example of CA Inter. So you will always be remember, okay, sir was saying you can pass at any point of time. It hardly makes any difference because you are passing an entry in the current year, the impact of which belongs to the last years and the past years. Okay. तो पास्ट का तो हमें पता ही है ना, पास्ट का तो हम बुक्स क्लोज कर चुके हैं. तो पास्ट का तो इम्पैक्ट हम कैलकुलेट कर सकते हैं कि करेक्शन ऑफ एरर का क्या इम्पैक्ट होगा और चेंज इन पॉलिसी का क्या इम्पैक्ट होगा, राइट? वी कैन डू ना. ओके. फॉर करंट पीरियड यू हैव टू वेट टिल एंड ऑफ द ईयर. और करंट पीरियड में तो कोई एरर होगा ही नहीं ना, क्योंकि अब तो पता लग चुका है. यू हैव टू करेक्ट इट, राइट?
So how can we find the notes, sir?
So the notes will be uploaded on the Board of Studies portal and you can download from there. Okay.
Achha. Is it not through email, sir? If we send our email to the concerned email
If you
ID?
send the email, I don't know, Ajit ji, are you there?
Actually, the SFM classes were like that only. The sir has
Swan,
provided.
you can do one thing, Swanlata. You can write your email to Board of Studies of ICAI or to me also, even cacs@gmail.com.
Sir, you cannot share your email ID, sir.
Acha, you can share the email to Board of Studies of
Any
ICAI and probably they will provide. Yes, Ajit ji, if you want to add
any
add
issues?
something. So अजीत जी वो ये पूछ रहे हैं कि आपका ये जो नोट्स होंगे, ये नोट्स ईमेल पे भी आप प्रोवाइड करेंगे क्या?
Sir, within 1 or 2 days, the notes and assignment will be uploaded on portal. We are working on it and it will be updated by 1 or 2 days.
Okay, sir. Thank you.
Okay, thank you, student. Thank you, Ajit ji. Thanks,
Thank you,
everyone.
sir.
I hope you found this session useful. And in the next class, we will complete Ind AS 1. I will show you a lot of practical example also in the next class, right? Thank you so much. Take care.
And students, please note, today in the evening there is a session of DirectX. The schedule will updated by today.
Recording stopped.